Good morning, everybody. Hi-ho, neighborino. How you guys doing today? Nice to see y'all in here. Whew. Good morning, Erla and Red Rob and Morgan. Nice to have you guys in here. Good day compared to a bad day. No power, TLC? Man, I'm sorry about that. I guess you're down in Houston somewhere. Morning, Adriana. Good morning, Mr. Flowers. Well, I'm in Texas too, but I got all the power I could hope for, so. No, Ron, I'm up here in Dallas. We got the outer bands. I got about an hour's worth of rain yesterday, and it wasn't even enough to wash anything away. It's just made my grass happy, so. We're pretty easy up here. My folks down in Houston are still without power, but as old men are, they won't hop in a car and come up here to the air conditioning. My dad would rather tough it out. That's on him. I made the offer. Good morning, Zorro. TLC, I know you've been out of the room for a while. Do me a favor. Actually, these are coming in a little quicker, which is nice. Yeah, you old people are a pain in the butt. TLC, I'm struggling to get things loaded up, but oh man, you took a tree. I'm sorry. My sister-in-law had one come down in her backyard too. It missed the house though, thank goodness. One year during a hurricane, John had a giant pine tree come down, went right through his bedroom. And then the power was out for a week and a half on him. It's hurricanes are no joke. I'd take a hurricane over a tornado any day though. You guys ready to talk about rules? Hey, good morning, Steve Diego, and good morning, Dee. Nice to see you. Let's talk about patterns. Hey, good morning, Christine. Let's talk about patterns. Let's talk about rules. Let's talk about keeping it easy if you guys don't mind. I just don't have it in me to make it complicated. So I'm going to focus on the path of least resistance for everybody. Easy is good. It's so good that I know what you're saying when you leave the S out. But before we do that, let's check news, guys. It is 9:01 a.m. on this 9th day of July. Tuesday at 9:15, FOMC member Barr speaks. And they're saying that's going to be low impact. Nobody's worried about it. Probably not a lot of people making reactions to it. Good morning, Steve. But at 10 a.m., Fed Chair Powell is going to testify. And notice that red box, guys. Treasury Secretary Yellen speaks. It's an orange box. Yep. Can you guys hear me? Just lost sound? Son of a gun. Can anybody hear me? Son of a... Oops. Alright guys, I am coming back. I'm not sure if you can hear me or not. We're going to find out. Alright guys, can you hear me now? That was a reboot on my end. Yep, you got me? Awesome. Cool. I don't know why Discord does that. I don't know if it's the big influx into the room or if Discord just hates me. I even uninstalled. You got the music. Oops. Kill it right there. Maybe he'll see that. I hope he sees that. Guys, if you ever get the music, you just have to unmute it. But you guys have me now. TLC's got me. Daryl's got me. Give me a Y in the room if you're with me. Let's see what we have here. Okay. Hold on, guys. All right, guys, I'm gonna do it all. For you folks in YouTube land, I apologize for this. Sometimes Discord audio doesn't work the way we want it to. So I am doing a quick reboot to make sure that everything is good and fresh. And hopefully I'll be back with you in just a second here. We'll get everybody back into the room and we'll start learning. I don't know why. I believe there's probably an awful lot of classrooms in Discord that start up at 9 a.m. And maybe we're just fighting for bandwidth. But as I go back to Discord, we'll get it squared away. And hopefully this works out. All right, guys, what do you think? Do we have any volume now? We good? We getting there? Awesome. Awesome, guys. I don't know why it does that. I think it's just trying to make the rest of my hair fall out. Who knows? Let's have some fun today, guys. So at 10 a.m., Fed Chair Powell speaks. He testifies. Not going to lie, I couldn't care less what he says. I'm not going to make trading decisions around what he says. If he says, hey, the world's in a perfect state, I'm not going long. If he says we're in shambles, I'm not going short. But there are people that do that. There's people that don't trade proven methodologies like you guys do, and they just wait for news and react. Knowing where news is coming from, what it does is it says, hey, at 10 a.m., there's high impact. I want to sidestep that emotional response. I don't want to be in front of it. And I typically choose not to trade a couple minutes before, and then I'll let it settle down before I start again. And then that's kind of it. A lot of the prop firms, guys, won't let you trade into news. So this awareness actually creates a pretty good advantage. And then I'm going to have to go duct tape my dog because she's barking. Everything that I talk about, guys, comes from the trading guide. Everything that I talk about, every answer that you could ever need as a brand new user, you're going to find in the trading guide. There's no secrets with Nexgen. And I want to go to the glossary of common terms first because there's a definition that I think should play a huge role in the new user's world. And honestly, I think this should play a huge role in the experienced user's role. And it's a high probability trade, guys. A trade where each indicator on every chart agrees with the rules for the trade. Typically, this is when all the triggers are the strongest and no termination conditions exist. And there's no trouble spots between your entry and your target, guys. This is the trade that we're going to talk about in the first hour. This is the high probability trend trade. This trade is going to turn you into a chart reader. It's going to allow you to read your indicators. It's going to give you the ability to understand what your indicators are telling you. And that chart read is going to allow you to know whether or not your rules are met. So chart reading, guys, this is what the high probability trend trade does for you. And it's a trade that typically wins 70 to 80% of the time. And it's a trade that creates confidence through the memory of success. But man, it turns you into a chart reader, and nobody can ever take that skill from you once you have it. But I always encourage new users, be a chart reader and then be a trader, because your chart read is going to let you know if your rules are met, and your rules are going to give you a statistical advantage every time you enter the market. And chart reading is about 90% of what you do every day. Looking at your indicators, deciding if they're telling you that your rules are met. And then about 10% of your day is actually taking trades when the rules are met, when the advantages are present. And once you can chart read, you're going to understand a few key concepts. You're going to understand where the market is likely to continue. This actually becomes your entry for the highest probability trend trade initially. You're going to understand where the market is likely to go, and this is going to allow you to make intelligent target choices. And then you're going to understand where the market is likely to stop. In these likely to stop areas, we call termination conditions. And termination conditions are really where the people that move the market are making decisions. This is where trends can come to a grinding halt, where big ugly bounces can happen, where fights happen between buyers and sellers that control the market. And you guys are going to know exactly where they are before you ever get to them. And you'll be able to decide whether or not you want to make the choice to trade into an area that may stop the market or simply let it break before you take a shot. And we're going to do this for the first hour, guys. The first hour of class is kind of lecture-y. The first hour of class, we're going to talk about this trade, this high probability trend trade. It only has 3 rules. That's it. Each rule provides an advantage. So you're going to have the advantage of momentum, the advantage of a clear path, and then you're going to have the advantage of entering where the market is most likely to continue. And this is your recipe for a trade, brand new users. The advantage of momentum is going to carry you through any and every trade that you ever look for, probably for the rest of your life, as will the advantage of a clear path. The entry area, rule number 3, is specific here to the high probability trend trade. Your entry areas will change, your management will change, your trade plans will change, everything will change when you become a chart reader. But as you develop that skill, these very 3 simple rules are going to allow you to keep it easy, to keep it focused, and to give yourself the highest chance of success. My goal is that you have a plan capable of winning more than losing as you become a chart reader. So keep it easy, guys. And the easiest way to get to where you want to be, post your trades in class. It says post your trades, but I'm going to tell you, post everything. If you're working on termination conditions, I want you to post a picture of a termination condition. Tell me your rules for identifying it, and let me help you become a better chart reader. If you take a trade, tell me why you entered, where you entered, why you exited, right? And let's work together to make sure that you're reading your indicators correctly, that you are taking trades with a higher chance of winning than losing. And then the second thing is use the spreadsheet that Nexgen gives you. I share mine every morning. I'm doing it right now. I'm dropping it into the room. This spreadsheet is your trade journal. This spreadsheet is 4 tabs. The first tab is copy of your tracking. And on this first tab, I've given you the instructions on how to use it, how to paste pictures into the spreadsheet. But you're going to post a picture of your trade, and the trade picture is going to have why you did what you did, where you did what you did, why you got out, right? You're going to walk yourself through everything that your brain was thinking by annotating the picture. And then there's a whole section for notes. So when you post it in the room, you're going to get feedback. It's kind of cool. So it's important that you tell me what your rules were. Why did you do what you do? What did you see? And if there's a place where you can do it better, where the read can become more accurate, we'll work on it together. The same is true for entries, for exits. Telling me why you did what you did. Why did you get in here and not here? Why did you exit here and not up here? And what we do is we're always going to look together, 15 hours every week, I'm live. We're going to look for a way to do it better, a way to make your chart reading more accurate, a way to have less risk, a way to create more profit potential. And we do this together with every picture that you post in the room. And then the spreadsheet, that first tab, is your trade journal. You should be going back to this spreadsheet every morning. Hey, what did I do yesterday, right? What worked and what didn't work, and what felt easy and what felt forced. And if you do this every morning, if you took 5 trades yesterday and you come back and you look at 5 trades, what you're doing is you're saying, man, this one worked beautifully. This one worked beautifully. These 2 failed. And it turns out on the failures, I traded into those likely to stop areas. So my focus for the day is to avoid trading into termination conditions. And it sets you up for the day, guys. It gets you focused on the advantages, and it will accelerate the learning process. No doubt in my mind. So Post in the room. Don't be shy. You can't manipulate my time. My time is your time. I want to see everything. And if you are day 1, day 2, day 3, and you're like, well, I don't want to take too much class time asking what everyone else always knows. Guys, this is your classroom. This classroom is designed first and foremost to get you to where you can read your indicators. And then it's second to go over and review charts of the people that have been with us for a long time, the people that are working and refining and stuff like that. But chart reading is always first. And we're going to learn the trigger line and the Fibonacci rules for when it's okay to trade for the high probability trend trade. We're going to talk about those 3 rules, where they happen, what they look like, what it means to you. I'm going to teach you how to study them, and I'm going to show you exactly what it looks like to enter and give you a management plan. I promise you, I'm going to give you everything you need. You need to simulate. Practice. Don't wait until you think you're perfect to simulate. Guys, you're going to learn for the rest of your life. So get in there now. Start taking trades. Practice your entries. Practice exits. Practice moving stops and targets. Practice using limit orders. Guys, get in there and just get comfortable with the tools. And then post in the room. If you're brand new, I know you're brand new. So every time you post in the room, I don't expect you to be perfect, but we'll always go back to these 3 advantages on your chart and help you become a better chart reader, I promise. The goal is that you practice the correct rules, not the wrong rules, because a lot of people get lucky, and luck tends to run out the second you go live. It's a short-term victory, but it sets you up for a long-term failure. We're going to simplify. I'm going to give you the KISS plan today, the Keep It Simple plan. It's 2 trades. It's a high probability trend trade, our main focus, and then it's a medium probability trade, which is a trade where most indicators agree for the rules of the trade. However, a small issue exists. Your ability to identify, to read your charts is going to identify that small issue. You'll have to manage it a little more aggressively. You'll have to take quicker profits, get to a 0 loss level. All of that is dependent on your ability to read the chart. So keep it focused on the easy trade first. It'll set you up for future success. And what looks will you commit to? And this goes back to the spreadsheet, guys. I'm going to go through the tabs real quick. The second tab is the 101 tab. Brand new users, you should be filling this out every day, at least 5 pictures in each category each day. In green, it's what it looks like to have your high probability trend trade rules met. This is rule number 1, being met in green, pictures annotated, exactly what it looks like, what it means to you. I've already given you 39 pictures to look at. And then weak triggers is the opposite of strong triggers. This is what it looks like when your rules aren't met. So you're creating that awareness between the best of the best and when we should sit on our hands. The same thing with the clear path. No termination conditions present, and then termination conditions present. Potential to break those areas, and then even the entries. I'm going to give you a sheet of paper that's going to give you a drill to go through to fill the spreadsheet out. If you do this, if you follow that plan, you're going to be a chart reader sooner than later. And then once you're a chart reader, you start taking trades, you start recognizing advantages, guys. You're going to develop your trading plan. Jonathan and I were talking this morning. He's like, I love the momentum trade, Mark. That's my trade. So Jonathan's job is to have his entry rules and then take pictures of those rules being met so he knows exactly what it looks like to take his trade. And this green section is where you're going to develop your trading plan. And then this orange section is where you're going to start developing a management plan for your entry. And you're going to begin to recognize patterns that repeat themselves. The more time you're in the market, the more time you're following your plan, the more things you're going to see out of the side of your eye. And then there's a whole section dedicated to termination conditions. My hope for each of you is that your empty section that I just gave you looks like the one that I put together within the next month or so. Because I've got about 350 pictures of Nexgen users doing great things with those advantages. I've got high probability trend trade entry sequences, for both longs and shorts. I've got a very mechanical management plan, the same one that's going to be outlined in the plan that I give you. But there's also another 25 pictures of how to manage trades, patterns that happen all the time, termination conditions that may stop the market, And then some of you want to be NASDAQ traders. And guys, there's a section that I've put in there to help you do that. But I'm going to warn you right now, the NASDAQ does not trade like crude oil or the S&P or gold. It's a completely different animal. And I would encourage you to understand your rules, recognize them, know what you're looking for before you go to that beast that is NASDAQ. But of course, do whatever you want. I don't give trading advice. But what happens is eventually you take so many pictures and you see these looks that they do become easy, that the advantages become obvious. Morgan, you have to put the NASDAQ down. It's not an easy market to trade. Everybody wants to be a NASDAQ trader because they see people in the other room trading the NASDAQ. But what you guys forget is that those guys have been doing this for 5, 7, 10 years, right? Jerry S., I'm going to put you in a spotlight real quick. Jerry S. has been using the software for 8 years. He has twice the experience that I have. And once you get repetitions, the easier you make it, the easier it is to find. And then Morgan, you'll get to a point to where you can trade the NASDAQ and it'll become effortless to you. But it takes a few repetitions to get there. So let's go through. Let's talk about the high probability trend trade, guys. Each rule creates an advantage. That's the beauty of it. You're going to start talking to yourself in terms of advantages. You're going to say to yourself, you're going to look at your chart, you're going to scare the animals in the room. And when you say, I do have momentum, because the large chart has strong triggers, and I do have a clear path because there are no termination conditions, and you're not going to talk about, hey, I wonder if it's a long or a short. You're going to say, man, I have the advantage of momentum from rule number 1. I have the advantage of a clear path through rule number 2. Let me find my entry area to reduce risk, to maximize profit potential. So it's 3 advantages that create a trade, guys. It's not your desire for the market to go up or down. It has nothing to do with your gut feeling or what the news was. And you're going to take these 3 rules, and you're only going to need 2 charts to do it. Again, you're going to see other people in this room with 3rd charts, 4th charts, 5th charts. You don't need it for the high probability trend trade. Your large chart, and even more specifically, the most current bar on the large chart will define the direction of the market. It will define the momentum of the market, and it will also let you know whether or not you have a clear path. Rules 1 and 2 are met on the large chart on the first bar. It's a very broad stroke of a brush, guys. It's a slow moving chart. And then once the rules are met, you'll go to a small chart, a faster chart, a refinement chart. It's going to take that broad stroke of a brush, that 1 bar, and it's going to break it down into 20 to 30 bars. This is going to allow you to pinpoint the best of the best spot for entry, where the market is most likely to continue. This will allow you to reduce your risk, and it's going to allow you to increase your profit potential. That's where rule number 3 comes in for the high probability trend trade. But I'm going to tell each and every person in this room, once you understand direction, momentum, and areas, your entry rules are going to change. You're going to start finding a lot more opportunities to get in and out of the market to make money. But initially, this is the best of the best because it's going to create some very simple expectations on patterns for you. And we use 2 charts because they're kind of a reflection of who's in charge. It's not you. Oh, I was despondent to hear that initially. I'm not in charge of the market. I'll never know what the market's going to do. This large crowd, these guys are going to define the trend of the market. It's going to do whatever they want it to do. And when they want it to do fast, they're going to define the momentum and create that momentum. And when they want to take profits or enter, they're going to define the areas where that happens. Not me. But the cool thing is I have Nexgen software. I know exactly where the areas are. I know exactly how to recognize the momentum they've created. And then I go to a smaller chart where these guys with a lot of money but not a lot of brains fight everything. And I can pinpoint exactly where they fail when they fight the large chart. This becomes my entry for the high probability trend trade. And guys, these guys lose 70 to 80% of the time, which means that I get to win approximately 70 to 80% of the time with that highest probability trend trade by using that refinement chart for entry. So let's get to work, ladies and gentlemen. Large chart, 13.2 on crude oil, S&P, It must have strong trigger lines. It has to have strong trigger lines because I'm banking on the advantage of momentum to get the ball rolling to look for an entry. So on the large chart, if the background is green on your large chart, the market's going up. The large crowd wants it to go up. You should think about going up with it, right? Go with the flow. If the background is red, the large crowd wants it to go down. The trend is down. Trading with the trend is always the most advantageous. To have strong triggers in an uptrend, it's imperative that both my small triggers, these solid lines, and the large triggers, these dashed lines, guys, they both have to be green as well. If they're not, I can't ever have strong triggers. If the colors don't agree, the triggers with one another, or both with the background, I never have strong triggers. But what it means to me to have strong triggers is that my small triggers have broken above and away from my large triggers. My large triggers are widening, and the space between the two, guys, this lets me know that the odds are favorable for the market to continue up. And we're going to do a little drawing this morning because it's fun for me. I want you to picture scissors, right? So those are my scissors. Gotta have it. Oop, Pac-Man. Won't. Have to have the handles. But guys, when scissors are open, they can cut. When scissors are open, the strength is there. It's that space between the blades that allows them to come down and cut paper. It's the space between the triggers that lets me know that the odds are favorable for the market to continue up. And the exact same is true in a downtrend. When the scissors are open, when the triggers are wide, when they're red, the background is red, those open scissors let me know that the odds are favorable for the market to continue down. And when the scissors close, when the blades come back together, guys, I can't cut anything. Best I can do is maybe take a stab at it, right? But the momentum is gone when those triggers close. Those are what we call weakened triggers. So strong triggers let me know that the odds are favorable for the market to continue up. OFM, you're going to see it on charts all day long. Odds favorable momentum. When I have these weakened triggers, the visual helps. I love it. When I have these weakened triggers, anything can happen. ACH is what you're going to see on charts annotated in this room, guys. Anything can happen triggers. That means that the market might retrace, it could reverse, it could bounce. Literally anything can happen. Advantages come from strength. And when I have strong triggers up, I'm going to buy that Fibonacci support on a smaller, faster chart. You'll see a tail on the large chart because it's a slow chart. It's a 1-bar event. Inside of this tail is 20 to 30 bars, that pullback from the small crowd. You guys will be able to pinpoint exactly where that tail is most likely to form. You'll be able to pinpoint exactly where that tail is most likely to form. Momentum pushes the market. Momentum can break those key areas. Guys, momentum will cover mistakes that new users make because momentum is a pretty kick-ass advantage. But it doesn't happen all day long. And if we work from left to right, there's the separation, there's the strength. And then we get into those weak triggers that anything can happen, and sure enough, anything does. The market reverses. After the reversal, the scissors open, we get odds favorable momentum. Everybody in this room will be able to pinpoint exactly where that tail is most likely to form with the simple rules for the high probability trend trade. And momentum carries it up right to weakness. Anything can happen. Sure enough, another reversal. Odds favorable, another tail, another pinpoint, another short opportunity to go with momentum. And then we get into the transition phase, guys. The large triggers are down and the small triggers are up. The colors don't match. I don't have momentum. The trend says up, but the triggers say down. I don't have momentum. I don't have confirmation. And guys, this is a transition period. This is the fight between buyers and sellers. And without odds favorable momentum, my rules aren't met. I don't have a trade in here. But this is where you guys are going to be predicting, trying to. You're going to be tempted to say, man, the background is green. I should probably go long. And sure enough, you get run over. Oh, the triggers are red. I should go short. And sure enough, it reverses on you guys. And rather than waiting for rule number 1, that little devil on your shoulder is going to say, dude, you're not making money if you're not in the market. But the reality is when the rules aren't met, If you're not in the market, you're not giving away money when you shouldn't be. Eventually, the buyers or sellers, one of them are going to win and get you back to odds favorable momentum. So, guys, that is our first rule. It's really not a difficult rule. This is the rule that most people get on day one. Let's open up a big chart and just see if we can find it. Check it out, guys. Odds favorable momentum. There's one of those tails. Strength, breaking areas, pushing the market right up to those anything can happen weak triggers. And sure enough, anything happened, guys. Look at that. Weakness. Does everybody see it? Can you give me a why? Strong triggers, push, couple tails working its way down. Weakness, there's your retracement. And I'm telling you, this happens all day, every day. Strength, weakness for the reversal. Strength, right into one of those key areas. Guys, learn to trust momentum. Go back and take some pictures. Start filling out that spreadsheet. So on the most current bar, let's blow it up. Do I have odds favorable momentum up or down? What do you guys think? My background is red. My large triggers are green. My small triggers are red. Show me a picture of what you mean by smooth curve or jagged. It makes absolutely no sense to me. Are you talking about when you get these little hitches? Let me see if I can find one. Like right here where I get a little hitch. Is that what you're talking about? Because I get that sometimes. Everything is down and they come together a little bit and everyone's like, oh my gosh, we're losing momentum. But it's still there. It's still that textbook look. I'm not sure what you mean by the hitch or jagged. Show me a picture. You call that the bubble? Man, I call that a meaningless fluctuation because this is a moving average. And when price pulls away from that moving average, it tries to follow. So you get these little things, right? It happens sometimes. I like that though, the bubble. Doesn't affect the momentum at all. That's smooth, right? So what does jagged look like? Help me out with that one. But in Morgan's picture here, let me show you guys. And maybe this will clear it up a little bit. Maybe it won't. I don't know. But let's find out. So when we talk about odds favorable momentum, ladies and gentlemen, right here the scissors open. Right here the scissors close. So this is your range. This is the area where you're looking for that highest probability trend trade from open to close on the triggers, right? That's where it's the best of the best. And you'll notice there's one of those bubbles that Steve talked about right there. But you still had momentum. It was still capable of breaking. So keep it pretty simple. Separation means strength. Returning to the large triggers shows you weakness. And let's see what jagged looks like. I love this, Morgan, because it's not something that... Oh, so they actually pinched and then came back down, right? So why did they pinch? There's that huge pullback, right? And the small triggers tried to follow. They're a moving average, and then it headed back down. So Morgan, let's ask ourselves, are they still red? Absolutely. Are they still below the large? Absolutely. Therefore, we still have odds favorable momentum, don't we? And Morgan, you want to know what made that happen? Do you want to know what made price pull up enough to create that jagged? I love this. You notice that they're dancing right between an area that price and triggers are splitting? No, not at all. I try to keep my rules very, very simple, Morgan. I either have odds favorable momentum or I don't. And the cool thing is that my odds favorable momentum is so clearly defined that from the point of separation when everything matches until it comes back, this is my advantage. I don't care if there's a bubble. I don't care if it's jagged. It doesn't matter to me. And on that second picture that you posted, that might be a trade that you have to take twice. You still had all the advantages, but there was enough of a fight to make it try to change direction. There it is right there too. There's jagged, right? And notice that it corresponds with a deeper retracement. It's just moving averages. Great question, dude. Thank you for that. Is everybody good? We're good, right? Momentum, separation, scissors open, they can cut. You can only get work done when you can cut. Guys, that's the one. That's the one that I never want to do without. I don't care what kind of trade I'm taking. The first thing I ask myself is, do I have momentum? Once I have it, though, looking for the high probability trend trade, I have to make sure that I have a clear path. So termination conditions false. Termination conditions are those areas that may stop the market, that may reverse the market, that may create an untradeable bounce. And when there's none in the way, I'm going to have room to make some money, guys. And we're just going to, room to profit target's true. That's too much writing. Let's call it a clear path. Nothing between me and my target. And we're going to use lines on the large chart. And I always say it like this, lines on the large chart. I define which lines we're looking for. Don't fall into the temptation of ranking these lines. Don't make one line more important than the next, guys. We're looking at divergence highs, divergence lows, red Fibonacci resistance, blue Fibonacci support, and yellow 1-to-1s. These are the hard and fast lines on a large chart where the people in charge are making decisions. This is where the buyers buy and the sellers sell and the fights happen. And it's not uncommon to see a market reverse to the tick off one of these key areas. So we have to use the trigger lines, and they're going to let us know if these areas are likely to stop the market, if these areas have the potential to break, or if these areas have been broken and they're no longer a concern. I'm going to show you exactly what the recipe is, and it never changes. On the large chart, price must reach the line. Price has to make it. Those dynamic Renko bars get to the decision-making point. And when they do, all you have to do, ladies and gentlemen, is ask yourself, where are my triggers? Say it out loud every time you're looking for a trade. Did price reach an area? Fibonacci resistance. Where are my triggers? They're below Fibonacci resistance. This is an area that may stop the market, that may reverse the market. There may just be an untradeable bounce that would ruin my good time. Same thing is true. Price trades down, everything's going. Price reaches Fibonacci support. Where are my triggers? Well, they're still above that area of support. Therefore, absolutely no trades into that area. Rule number 2 is not met. I don't have a clear path. Notice weak triggers. Weak triggers, these areas are more likely to hold when the triggers are weak. So it never changes. Price reaches the area, where are my triggers? Guys, every time you reach an area, for that moment, it's going to be a termination condition. But the cool thing is if I'm in a short trade and I have all this momentum, I've got a giant blue line in the horizon that says, hey, Mark, this is where the market is likely to go. When you get there and the triggers aren't just crazy strong, what a great place to get paid, rather than hoping that it breaks. But areas do break, typically with odds favorable momentum. So when the small triggers and the large triggers get to the other side of an area, in this case, the small triggers and the large triggers get below support, well, support turns into resistance. And look at that. There's one of those tails right off of resistance. Weak triggers, there's a reversal, odds favorable. The small and the large get to the other side of resistance. It's now behaving as support. The area is broken. Guys, areas are broken once the small and the large triggers get to the other side. So it takes a minute. Price reaches right here and the triggers don't break. The area is not broken till almost 15 bars later, right? Maybe not, my math stinks. 10 bars later. So what do we do here? Absolutely nothing. We let the decisions play out, guys. Maybe it's going to go up. Maybe it's going to go down. Maybe there's going to be this big, ugly fight. I just say to myself, I have absolutely no idea, but my highest probability scenario is let the area break. Is everybody good with that? An area is either broken or it's a termination condition, brand new users. If price reaches support and the triggers don't break, guess what? No more short trades, even if you believe there's odds favorable momentum and you should do it anyway. Price reaches resistance, smalls and large, they don't break. Look how it holds. Odds favorable momentum pushes through, right into the fib, weakness, and sure enough, look at the untradeable fight going on right now, guys. Decisions are made at key areas. You guys know where these areas are before you ever get to them. It's pretty outstanding. And then once you can do that, once you can keep it simple, it's either broken or it's not. It's either high probability trend trade or it's absolutely no trade. Then you work into the medium probability scenario, guys. And this takes the potential of an area to break. So when the small triggers smash, and I want you to embrace that word. I want you to make that word your favorite pet. When the small triggers smash through an area, 3 to 4 points, really get through. Not some little prairie dog peeking its head up out of the hole, but literally zinging through that area. When I have that look and odds favorable momentum, ladies and gentlemen, these areas have the potential to break when the small triggers are through, but the large triggers are not. 50% are through, 50% are not. Guess what we call this trade? The 50-50 trade. Has nothing to do with your chances of winning, guys. Has everything to do with trigger location. Trigger location will define the areas, whether they're likely to hold, likely to break, or broken. So this 50-50 look lets you know that they have the potential to break. But the path is still not clear. Rule number 2 isn't met. Guys, the only way rule number 2 is ever met is that the small and the large clear the area, and that is met until you reach the next area. But I'm going to give you guys a rock solid plan for trading this potential. And since the path isn't clear, you have to say out loud to yourself, the path is not clear. I'm going to insist on momentum. I'm going to insist on a low risk entry. So guys, that's termination conditions. And the cool thing is when a termination condition reverses the market, when price comes all the way up to Fibonacci resistance and the triggers remain below, everybody in this room says, man, that's a termination, no more long trades. When your large triggers roll from green to red, this is the reversal. Now it's what we call a strong top. A strong top means that there was such an impactful decision made by the people in charge right at a key area that it reversed the market, that it went from green to red, that everything changed direction right at that area and the triggers couldn't get through, guys. This sets you up for the highest probability trades going the other direction. This sets you up for having the highest chance of winning those medium probability trades, for finding those momentum trades you guys love. And the same is true at the bottom. It's a termination until the reversal, and then it becomes a strong bottom. This is a large chart endeavor, guys, and you're going to see it on your high probability trend trade checklist that this creates an advantage. So is everybody good? Price reaches an area, triggers remain below, no trades into that area. If you can commit to just that, you're going to be like 50% better than the average bear. There's one more termination condition, guys. This one happens on a small chart. This pattern happens on every chart, but because the small chart is the fastest chart, you're going to see it on that chart first. 3 divergences in the same price range may terminate a trend. 3 divergences, 3 losses of momentum. Let's go through and define divergence real quick. Hey, good morning, Adamos. We sent out a search party for you yesterday. Worried sick. Nice to see you in here. So what is divergence? Let's just visual. I love the visuals, guys. When price goes down, man, that's not cool. And then price goes up. This is a pivot, and that's all it is. Price goes up, price goes down, it's a pivot. Price goes up, price goes down, it's a pivot. The yellow bar, or the yellow arrow, is going to represent price, guys. The black arrow is going to represent momentum. So if momentum can't follow price, a pivot is created, and you'll know this about the third bar up. You're going to see this blue line from a low, or if momentum can't follow price, you'll see this magenta line from a high. This is what we call divergence. Divergence is nothing more than a loss of momentum. That's all it is. Don't give it any superpowers. But here's the deal. If you get 3 losses of momentum in the same price range, well, then that may terminate the trend. And guys, it becomes even more powerful when you have those anything can happen triggers. That same lesson from rule number 1 that says that when the smalls work their way inside of the large, anything could happen up or down. And what you're seeing here is a fight. You're seeing people fighting. You're seeing momentum being lost. And when you get 3 of those in the same price range, guys, that's enough to have the potential to turn the market the other way. I'm not going to use 3 divergences to define a strong top or bottom. That's a large chart deal. But 3 divergences on my small chart, if my large chart says odds favorable to the downside, if my large chart has a clear path, and I come over here to look for an entry, and I've got 3 divergences, well, I'm not taking that last short. I'm not taking that attempt at a short because it may go up further. And if I'm in on the perfect short, I pinpointed that entry, I can use a third divergence as an exit condition to keep the powder dry, wait for the next best trade. So I'll see 3 at a low or 3 at a high when that large chart can't give me that information fast enough to let me know that it's changing direction. And this is the only time a small chart will define a termination condition. So rule number 2, guys, 90% of your day is spent reading charts. 10% is actually trading. And what sucks, it sucks. I don't mind saying that it sucks because I think it sucks, is that you've got to learn to respect the 90%. You've got to learn to trust your rules to a point to where you almost feel dirty if you break them. I don't want to break my rules. My rules give me advantages. I don't want to break my rules. My rules have been proven through study, through simulation, through back testing to win more than they lose. Which means that when rule number 2 isn't met for 3 hours, I don't have a trade for 3 hours. But the cool thing is I don't accidentally go long and lose $300 or decide that the momentum is great and lose another 3, and then hoping that this breaks and lose another 2, another 3. Guys, accounts are blown out in consolidation, and most traders that come to me that have a background in trading say, man, the hardest thing for me to do, Mark, is to recognize when a market is consolidating. I typically lose more than I win because I'm trying to figure it out. Rule number 2 identifies that consolidation, and it'll clearly define where the market needs to break out of to find those opportunities. Rule number 2 will keep you out of these scenarios. Rule number 1 very often will keep you out of these scenarios. But what I've found in the last 4.5 years of training people to read indicators, teaching people to day trade, is that the successful traders and the unsuccessful traders, the only difference between the two, it's not the ability to read charts, it's not some magic understanding of futures markets, it's not a history in finance. The biggest difference is the people that can do absolutely nothing when there's nothing to do tend to make the most money. The people that don't give away money, dig a hole hoping that the market does something, those are the people that typically, in my experience, have the absolute most success. The people that have a clear set of rules and commit to following them. And I'm going to tell you, the hardest thing that you'll ever do is absolutely nothing. So there's our first 2 rules, guys. Rule number 1, strong triggers, giving me the advantage. It's the 4-letter word in trading. Yeah, that's true. It's hard to wait sometimes, isn't it? And you know, Paul and I were having a discussion this morning. The better you get at chart reading, the more patterns you recognize, the more imperative it is that you have a very clear plan and this desire to stick to it, because you'll begin seeing everything. There's that pattern. Let me go long, even if your rules aren't met. Let me go short. Let me do this. Let me do that. So always, let me follow my rules. Don't let your chart read supersede your rules. Let your chart read tell you that your rules are met. So far, our chart read has said that we have momentum, that we have a market where the odds are favorable for it to continue in the direction of the trend. So far, our chart read has told us that no termination conditions exist, that we have a clear path, that there's nothing between me and my target. So now we're going to let the small crowd come in, guys. Now we're going to define the entry area for the highest probability trend trade that you can take. And the rules say that you're going to use a limit order to buy or sell a pullback at an area inside of favorable large triggers. And I want you guys to embrace the words for the entry, because great entries create manageable trades. We're going to use a limit order. I'm going to be so precise in picking my spot that I'm going to wait for it with a limit order. I'm going to wait for the market to come to me. And I'm going to wait at areas inside of triggers. And we're going to let the small crowd come in, right? We're going to use that refinement chart. And you guys will pinpoint exactly where the market is most likely to continue. The large chart on this one bar with the square around it has told you that the market is going down. It has told you that you have odds favorable momentum. And it also says this one's got a good chance of breaking. And when the market is trading all the way down here at 72.61, you're going to turn your attention to the small chart and you're going to hope that the small crowd shows up to fight. And if they do, inside of this one bar, there's about 30 bars. There's an up and there's a down. We're going to pinpoint right where high has the potential to be. We're going to pinpoint right where the lows have the potential to be. On the large chart, it looks like a tail. That's a slow one bar endeavor. On a small chart, it's a pullback to an area inside of favorable large triggers. And guys, that is rule number 3, pinpointing. So we use triggers. We use areas inside of triggers because triggers are moving averages and price loves to return to the moving average, right? We saw it on those jagged trigger lines that Morgan showed us earlier. Price loves to follow triggers, guys. So on the large chart, anytime it's screaming to the upside, my anticipation is that price will correct to the large triggers on the large chart. On the small chart, when everything says up, my anticipation is that price will correct to the large triggers on the small chart. So your entry chart uses both the large triggers from the large chart and the large triggers from the small chart. From the large chart, we call them synthetic triggers. They look like they have steps on them, but they're just large triggers, guys. And when the correction points overlap, one on top of the other, 2 snakes riding piggyback for Christine, guys, this is going to give you the smallest window of opportunity. This is going to create the smallest, most precise correction point. And then when we put areas in there, fibs, mid-bands, yellow 1-to-1s, we give the market something to bounce off of right inside of that correction point. So favorable large triggers, guys, this is your look. This is the best of the best. This is going to give you the least amount of risk and the smallest point where the market is most likely to continue. And this is how you find it, guys. When everything says up on your large chart, when the market is up, when the momentum is up, when the path is clear, you're not just jumping into the market. You're waiting for the small crowd to fight. You're waiting for a reversal bar, which is a red bar after all of these green bars. The reversal bar is not your entry. It just signals the beginning of the fight, guys. It takes a little bit of patience, right? So the reversal bar prints, and you're going to go through this process. Where are my triggers? Where's my large trigger? Where's my synthetic trigger? Are they overlapping? Are they one on top of the other? Are they favorable? And if they are, you're going to look inside there from the highest point to the lowest point of those trigger lines, and you're going to say what areas are inside of favorable large triggers. And I want you to write that on your chart every time you take a trade. My trade comes from areas inside of favorable large triggers. And if you write that 50 times over the next 30 days, you're never going to miss a high probability trend trade entry. Your window of opportunity, guys, the woo, as Ric Flair would call it, is from the highest point of support to the lowest point of support inside of favorable large triggers. Those areas that we use can be fibs, mid-bands, or yellow 1-to-1s. But the key is, if they're not inside of favorable large triggers, we just don't care about them. They have to be above the lowest line and below the upper line. And you're going to activate a limit order just above that highest point of support. And you're going to say to yourself, come on, small crowd. I hope you ate your Wheaties. I hope your uncle gave you enough money to push you down to my perfect entry. And 70 to 80% of the time, they're going to fail somewhere right in this window. You're going to take advantage of it, and you're going to take the momentum and the clear path up to your targets. Guys, this is your entry. Study it for 20 days. Great thing about futures, don't care if the market goes up or down. It doesn't matter to me. When my large chart rules are met, I'm going to patiently wait for a reversal bar. I'm not going to enter on the reversal bar. When I get my reversal bar, it signals the beginning of the fight. Guys, I see so many people entering on the reversal bar. The likelihood is that it's going to push right to those triggers, large and synthetic. Thank you, Cindy. 10 a.m. news. And guys, it is Powell testifying. It could be a big one. I'm going to look for the lines for a bounce point. I want you guys to picture throwing a tennis ball, right, as hard as I can. I don't expect the tennis ball to stop right here. That's just silly, right? It's the middle of nowhere. I don't expect it to stop off of these triggers, but when I have something solid for it to bounce off of, guys, that is the perfect spot for an equal and opposite reaction. This becomes the entry. My limit order goes just below that window, that lowest point of resistance. This becomes the entry for the highest probability trend trade. And once you can define where the market is most likely to continue, you know where it shouldn't go. And if you start using that language on day one, the trigger lines are the correction point. The trigger lines are where I expect price to correct to. And even if you end your sentence with a preposition. I hear you judging me, Christine. Well, you know where the market shouldn't go. You know that it shouldn't go beyond that correction point. You know that it shouldn't go beyond those areas inside of the correction point if this is going to be one of those winners. And your first protective stop goes outside of that window. Above it, below it, 4 to 5 ticks. And guys, this is that 20 to 30%. This is that cost of doing business. This is that acceptable losses because of all the advantages in place. But the cool thing is, with all those advantages, you are more likely to get a confirmation bar, a reversal bar in the direction of the trend. Your new stop will go 2 ticks above it or 2 ticks below it. And guys, the precision with which you can enter at areas inside of favorable large triggers, even if they fail after a reversal bar, it may cost you $40 or $50 per contract rather than $200 to $300, hoping that the market decides to go up from way beyond those correction points, way beyond those bounce points. So you've got to study it. You've got to believe it. You've got to understand it. The easiest way to do that is to go back on your large chart, and when the rules are met, circle a tail. When the rules are met on the large chart, circle the tail. If that circle lines up with areas inside of favorable large triggers, always using the language, well, then you have the highest probability trend trade, guys, and it's your job as a day trader, as a learner, as a student, to take that picture of your highest probability trend trade, to grab that screencast link, upload it to screencast, go to your spreadsheet, and make sure that that look is right there. And then you've got to say something profound, like, oh, I don't know, how about never miss this setup? And I'm going to commit this look to memory, because what it does for me is it gets me speaking in terms of momentum. It gets me recognizing whether or not my path is clear. It has me focused on being patient and waiting for the entry inside of favorable large triggers. And I'll be darned, it makes it easy with all this momentum and a clear path to find my way to my target. So you've got to go back. These are from the spreadsheet, guys. You have all of these. You can go study these. If I circle the tail with odds favorable and a clear path, it should come back to an area inside of favorable large triggers, and then I will ride that wave of goodness all the way up to my targets. If I have odds favorable and a clear path, my job is to wait for the pullback to resistance inside of favorable large triggers, at which point I can take that trade and find my profits. And guys, that's it for high probability trend trades. If you go to the client trade section, you have entries for both longs and shorts in there. But here's the deal, is you've got to learn the looks, right? You've got to know what it looks like to have momentum. You've got to know what it looks like to have a clear path. So this is where I start giving you guys gifts. The first one is Chart Reading 101. See all that consolidation, guys? When there's a big announcement coming up, you'll see that consolidation. Guys, this is Chart Reading 101. This tells you, go take 25 pictures each of your rules being met and your rules not being met. And it says, don't just take pictures, talk about why they're met, what they mean to you, what are the advantages, what rule does it pertain to. And if you go through this 245 pictures, I just dropped it in the room, get those pictures into your spreadsheet, you're going to be a chart reader and you're not going to make mistakes on those three advantages. Let's watch the S&P as that 10 o'clock announcement comes out. FedPal speaking. It's high impact. Let's see if we get a reaction out of the market. Look at that. A few seconds before, the market literally is almost standing still as people are waiting. And right now, we don't have momentum. We don't have a clear path. And here comes that 10 a.m. news. Guys, are there any questions about the high probability trend trade? It's not a difficult concept. The rules aren't difficult to learn. It takes a little bit of time. You do have to study. You do have to ask for help if you need it. But it's a very doable trade. It's there for a reason. Pal needs a new job. All right, here we go. You can feel the wind up, right? So far, it's kind of a dud. Maybe he's just now speaking. Let's see what happens. You guys want to know something cool? Is even during chaotic news releases, it's not uncommon to watch the rules be met. It's too fast to trade typically. This is kind of a dud. Maybe it'll go through. We'll see. I don't know. All right, I'm going to give you guys the next one, and this is going to help you with identifying the high probability trend trade, going and taking those pictures. And I've consolidated them just to make them a little easier for you. Is once you have Chart Reading 101, I've given you, this is called the checklist page, guys. And what this does is this gives you a page, and it's just on one page, but it's just a checklist to take your high probability trend trade. Is the market coming from a strong top or bottom? Do I have momentum? Is there nothing in the way? Do I have areas inside? I've never had anybody use this checklist and use it correctly, right? Actually have the rules met and do worse than 70% ever. So it's imperative that you understand these four little concepts so that you can be consistent. And this is going to help you. When you scroll down to page 2, there's that strong top or bottom. Visually, there's a video link to it, my brother being brilliant for 45 minutes. There's odds favorable momentum. There's weakness. You should never get these two confused. There's a termination condition. There's the potential to break. And there it's broken. Window short, window long. Guys, these are your very basic rules. I'm going to give you this checklist as well. So now you have Chart Reading 101. And you also have the checklist that visually shows you exactly what you're looking for with that chart reading. And then my favorite part of the day, ladies and gentlemen, I'm going to give you the KISS plan. And I've put these two back together as well. This is your KISS plan. And Cindy, that was a dud, wasn't it? That was some lame news. Not much of a reaction. Not at all. But we're still no momentum and determination, so there's nothing to do. Guys, this final page that I'm giving you is going to be the KISS plan. The Keep It Simple Sunshine plan, because HR says I'm not allowed to call anybody stupid. And this plan is a stepping stone, guys. It's just it's the beginning. It's the foundation. It's the alpha. This is the solid rock on which you will build your trading plan. And it's designed to optimize your chances of success with the high probability trend trade. And I love that phrase. I put it in red. Optimize your chances of success. If you want to take the highest probability trade possible, this is how you're going to do it. And then through simulation, study, class feedback, and continuous practice, you'll be empowered to craft a plan tailored to your personal goals based on your experience reading the indicators. I left that in there because it makes me smile, guys. That's AI telling you when you're a chart reader, you're going to create your own plan. When you start to recognize patterns because you're focusing on the easy ones, you're going to find more entries. You're going to find a different management plan. But the simple plan for consistency, guys, don't fight the large chart. The large chart's the large crowd. The large chart, you're not going to win. You're a small fish in a big pond. Here you go. This one's for Ron. This is how I picture myself in the market, guys. This guy, and it is Shark Week, this guy is the big money investor. This is the guy with the bottomless pockets. This is the guy that when he wakes up and says, you know what? Let's make the NASDAQ go up today. It goes up. I don't have to fight this guy. I know exactly where he wants to go. I know exactly when he creates momentum, and I know where this guy's going to react. I want to be a remora. I want to be this guy. I want him to saw a tuna in half, and I'm going to get more than I could ever need from that little chunk of everything that he does. There's the guy that tried to be first, the guy that fought the trend, the guy that tried to go against the shark, guys. He's going down the belly. As a remora, I don't fight. And I have to define my entry. And once I define my entry, guys, the high probability trend trade creates a manageable trade. This high probability entry is the best of the best. The high probability entry assures me that I have odds favorable momentum, that I have a clear path. It guarantees that I have entered the market where the market is most likely to continue. And guys, this entry is honestly the beginning of your management plan. And your management plan for the brand new user should be just as mechanical as entries. Remove the emotion, get rid of the doubt, extinguish the fears, guys. Let it be nothing but if then. And then AI tells us that when you learn to read your charts, you're going to change your management plan. You're going to hold for bigger moves. You're going to have a different stop placement theory. But in the beginning, let it be very mechanical, guys. And everything in your management is dependent on your ability to enter the market where the market is most likely to continue. Because when you can do that, and I'm telling you right now, if you keep it focused, you'll be able to do this by the end of the second week. By the end of your first week, demo users, you're going to know that this works. And I'm going to teach you how to study it so you can learn how to work it. Your stop will go where the market shouldn't, and you're either going to get stopped out or you're going to get that reversal bar in the direction of the trade, guys. All that momentum, the clear path, the bounce point, you're going to see a reversal bar. And if you didn't get stopped out, your new stop is 2 ticks above that reversal bar. If then, not I think, if then, if I don't get stopped out, then my new stop goes above a reversal bar. And now I'm either going to get stopped out for a smaller loss, and I'm cool with that. Because I know that if I flip this coin, that is the high probability trend trade, that potentially it's landed on heads 7 out of the 10 times. Is it reacting now? Nah, not really. That's just a termination condition that reversed the market. I'm still directly into termination conditions, Pete. I don't know if I would call that a reaction. It took it 7 minutes to do it. It's not uncommon to see this market go so ballistic that you'll go 100 points movement inside of seconds on high impact news. But let's get back to management. If I don't get stopped out for a smaller loss, guys, then my first target gets hit. And my first target is only $100. KISS users, only $100. Why? Because $100 builds confidence. And there's somebody in this room that I can tell you that's his whole goal is $100. He just does it 10 times a day. How easy is that? How low stress is that? $100, guys, creates confidence. $100 dries sweaty palms. $100 shoos the butterflies from your guts. And you're going to move your stop to break even. And you're going to say, you know what? I just got paid and I have absolutely nothing to lose. And it's going to help you hold for that second target. And the second target's only $200 away from entry. And if it hits that second target, ladies and gentlemen, that is a $300 trade. $300. If that's the best you do every day, buys one heck of a chili dog. If that's the best that you do every day, guys, that's a $72,000 a year, give or take. And you know, I made this morning. And I haven't shared it yet, but I'm going to share it right now. Because there's a lot of people that say, Mark, $300 is a bullshit number. I can't make any money on $300. So here it is. Daily goal times 252 trading days in a year, guys. If the best you do is make $100 a day, that's $25,000 additional income. 200 is 50. When you get to 600, $300 per contract, that's not a lot. $151,000 a year. $1,000 is 252. But here's the deal, guys, is they make trade copiers. So when you can consistently make $100 a day, every day, and that's not hard to do if you wait for advantages, guys, you can put it on 10 accounts and it's the exact same as making $1,000 a day. There's traders in this room that make $500 a day and they do it across 20 accounts. And they're putting themselves in a position to make millions on the same $500 a day. So there's this idea that it's not about making all the money. Make the easiest money and compound. Make the easiest money, guys. Here you are working at McDonald's. Here, unfortunately, you're a first-year teacher. You made it to a nurse. You're a crappy lawyer. You're a really good engineer. Maybe working in anesthesia. And it just keeps getting better and better. And all of this is doable in a day. In 10% of your day, waiting for advantages. So, guys, that is my spiel. And then this KISS plan goes into the 50-50 as well. It's included on there. Take a look at it. First medium probability trade in your plan. I'm going to drop the KISS plan in the room for you. So the first hour is the lecture, guys. The first hour is all of you sit on your hands and don't want to interrupt me. The second hours are where I need you to interrupt me. I need you to say, Mark, clarify. Mark, tell me this. Mark, show me that. Mark, what about this? And it's your questions and it's your comments and it's your feedback and your pictures that really makes this room amazing. 200 a day, you're a 20-year teacher. Oh, Christine. If any of you have children in Brevard County, Christine has probably taught them. Coolest teacher ever. All right, guys, I'm going to go take 5 minutes. I'm going to stretch my legs. When I come back, we're going to start looking at the pictures that you guys have posted. Before we do that, let's do the read, guys. Do I have odds favorable momentum on the large chart? Give me a Y or an N, especially new users. Do I have odds favorable momentum on the large chart? Christine, crypto. Daryl says no. Jonathan says no. I like it. Do I have a clear path up or a clear path down? Look at these shenanigans. There's consolidation, huh? So guys, yeah, it can definitely go right, huh, Morgan? So guys, if I don't have momentum, if I don't have a clear path, what do you suppose my best course of action is? Is it to sit on my hands? Daryl said it. Just wait. How much is it going to cost you guys to wait? What does Ninja Trader charge you guys to do nothing? Scratch the dog. Amen, Steve. You could hope, Jen. But you know what my father-in-law used to say? Wish in one hand, shit in the other. Tell me which one fills up first. That's a true story, guys. All right, I'm gonna walk away for a minute. What a great way to walk out on break. If you have a question, post it in the room. I know you did, Jen. If you have a comment, post it in the room. Your ex's family said it too. It's got a little hillbilly to it. When I come back, we're gonna go and we're gonna talk about 3 rules, guys. Adriana. Here, let's look real quick. Guys, if you ever have to jump on your scooter and pretend to work, like Adriana does, I don't think she does. I think she goes out for a chili dog or something. I want you guys to see something. When a termination reverses the market, this is a huge indication that things may go the other way. With this level of momentum, Adriana didn't have a clear path. But because of this strong bottom, because of this level of momentum, and because of this pullback right to the areas inside of the triggers, Adriana had the confidence to get in 4 contracts here, to take 3 off at trouble and say, you know what, while this market is screaming, I'll hold one for a bigger contract. And Adriana, we didn't do the math on 1600. And Adriana, are you done for the day? That's it? No more trading? This is my favorite part. $1,600. Let's say that this is an exceptional day. And she only makes half that normally. Adriana, could you buy me something pretty for Christmas on $200,000 a year? I feel like you could. And this is kind of, guys, this is kind of what we're getting at. Is what you can make versus what you need to make. Set a goal and then GTFO. Go hop on your scooter, go to the beach, play golf, grab a chili dog, chase bikinis as Ron does, whatever. Make your money, get out, go live life. That's the beauty of doing what we do, ladies and gentlemen. So, Adriana, have an amazing day. Beautiful trade. Guys, feel free to watch the S&P. I'm going to run a lap. I'll see you guys in 5. All right, guys, let's get into the second hour. Still nothing to do in the S&P. What a bummer. Whoop, that is my untitled workspace, guys. Sorry about that. I meant to give you the actual. There's crude oil. Crude oil. Let's circle a tail real quick. With that odds favorable momentum and clear path, what did that look like? Is anyone going to show me this one? Oh, that was close to the mid-band inside of favorable large triggers. Didn't quite work out. And then it scrambles for a little bit. And then there was a beautiful entry that had to be managed out of. But if you got in at 7, you made $100 break even, didn't go the distance, and it looks like it turned on you. And now we're stuck in termination conditions again. So guys, I'm going to scroll to the top of the room. Just a reminder, I don't judge you on your trades. I don't judge you on whether you followed rules. I just want to know why you did what you did. I want to know why you took an entry, why you took an exit. I want to know what your chart read was. And if you give me that, I will give you the best feedback that I know how to give you. If you don't give me that, I'm just going to read your charts and go back to rules. So, D, let's see what you did. D got it. She's like, you know what, Mark? It's 9 p.m., but I feel like you're going to want to see this tomorrow. And let's see what happened. D says that there was a strong top because price reached an area, the small triggers remained below it, reversed the market. That's the best of the best. And it provided odds favorable momentum, which is amazing. And it was 50-50 on this divergence low. And D says, you know what? If I get in at an area right there at those triggers, I know where my stop belongs. Let me go ahead and get paid on the way down. And D, this is absolutely beautiful. Absolutely beautiful. And we talked about this one yesterday as well. And it revolves around a strong top that creates momentum, knowing where to get in, where the stop should go, and just riding that momentum down to profit town. Beautiful job, D. Really nice trade. All right, scrolling up. Let's see what else we have. I'm going to boot past all the morning shenanigans that we talked about, ladies and gentlemen, because I think we talked about all of it. And then Ron says, you know what, guys? With a clear path and the triggers down, there's an opportunity in there. And guys, this is a little more advanced. And it's funny because Ron's trades used to drive me nuts. There was a point in my life where if it wasn't a high probability trend trade in this room, I felt betrayed. Why would they show me this nonsense? And then what I realized is that Ron's trades are very well thought out. And Ron's trades take the very simple concepts of the high probability trend trade and translate them into quick profits. And he does it better than anyone that I've seen so far. And it was a month or two of heartburn. And then I started studying what he did, and I messed up a lot doing it. And then he was nice enough to tell me how he did it. And eventually, I was able to add Ron's trade into my trading plan because I believe in this one wholeheartedly when it's executed properly. So you guys are going to teach me as much as I teach you. Rob, this is what I got from your screencast. I think what happened is you stuck two of them together. Hold on. Let me see. Nope. Rob, let me check that one. Maybe that's the same one. Had odds favorable momentum and a clear path. You bought the pullback and stopped out soon after. So Rob, where did you, is this the one that you took right here? Cool. So let's look at it. Termination, odds favorable, Potential to break, right? Not a clear path. Is everybody with me on that? Look at this, guys. Beautiful. All triggers above, higher divergence, markets cranking, smalls outside of the large. That's a great look. Does everybody see it? Because this is important. That's a sexy look. And then this darn fib, this key area where the people in charge might be making decisions, guys. 50% of my triggers are through, but 50% are not, which means it's a medium probability trade. Is everybody with me so far? It's a beautiful look. It's a perfect area inside of favorable large triggers, but it's only medium probability. Can you guys give me a why? Can you hear me? I'm gonna make sure you guys can hear me. Okay. So I'm gonna do this real quick, and guys, this is why I believe in rules so much. Let me blow this up. And Rob, thank you for this picture, because this is a perfect picture. But I'm gonna do something. If you have Snagit, you can do this too. If you just have Screencast, you won't be able to pull this one off. But I'm gonna take a picture of his trade. So Rob, what we've done is we've gone from, so high probability says that we have a clear path, 100%, right? Which means that the small and the large triggers get through. What you're looking at right now is that 50-50, where the area is not quite broken, the smalls are through, but the large are not. So what I'm going to do real quick is this plan right here is designed to optimize your chances of success with that 50-50 trade, with that medium probability trade. So I'm going to take a picture of the checklist. And I'm going to drop it onto your picture. And this is pretty cool. And this is one of those things, guys, while you're learning, this is the best of the best. And as you grow with the software, you'll begin to see patterns. So I'm going to talk about two options. Is the market coming from a strong top or bottom? Guys, that literally is, we're going to call that a strong. This was weak because the triggers got through. And then when it hits it and the triggers are all above, we're going to call it strong. So Rob, perfect. Odds favorable on the 13-2, we've got it. Smalls outside of the large on the 5-1, it's there. And then it's this one right here, no divergence on the 5-1. Guys, divergence is the biggest killer of these 50-50 trades. Because what does it mean? I don't have a clear path, and now I'm giving up momentum too. It's a loss of momentum. Guys, you've got a super low risk entry right here, which means that if you get in at this mid band, your stop's about right here. And Rob, you said you got stopped out of this one, right? So according to the KISS plan, it doesn't quite fit the rules, but let's go look at it. And I didn't have a fib where you had a fib. Maybe I'm a little off or something, but it was right about here is where that fib was on your chart. So you take the perfect entry, right? With one divergence because of the strong bottom, life is good. This second divergence, if you're willing to take a 50-50 with one divergence because of the strong bottom, this second divergence said, Rob, get the hell out. But the cool thing is that with your entry, assuming that you took the correct entry, assuming that you were in this trade just above the mid band, this was one of those trades where you could make $100 and get out break even. And I'm not sure how you managed it. But when you know that it's not a clear path, and you know that divergence is problematic, and you know that two divergences is an absolute killer, that's the conversation I had with my brother this morning. My rules say this is a bad top. My rules say I have to wait for the reversal bar. My rules say this is a 50-50, right? Divergence on a 50-50, second divergence, for me, is an absolutely no more. And it's the rules say get out with the second divergence. So I knew that I didn't have a clear path, and what it did is it opened the door for me to manage out with that second divergence. And that's the second piece of the puzzle. That's the second piece of the puzzle. You managed a $700 loss with no stops. So what did you learn by losing $700? What that tells me is that you don't have an exit plan yet. You don't have to type out. I'll help you. Because if this was my entry, if this was my best of the best entry, I have to plan not only how to get in here, but what it takes to get me out. And management's not easy. And always have your stop set. That's huge. But management's the second piece of the puzzle for a reason, guys. Once you start nailing great entries, they become easier to manage. So now let me go through. And I don't mind the break in the action. I'm going to give you guys this as well. But there's two things that you need to know before you try to go live. In my opinion, you go live if you want. It's your money, right? You date that girl that's already tried to hit you with her pickup truck. That's cool. That's on you. I've done it. But before you ever sit down for live money, guys, you need to know what your rules for entry are. You need to know what it's going to take to get you in. You need to know where that entry happens. You need to know what the conditions are. And you're not doing this because I'm this big rule follower. If you have known me more than a year, you know that I'm not. If you've known me in my personal life, you definitely know that I'm not. But what happens is your rules give you a statistical advantage. They say to you, hey, Muser, every time you follow this, you're likely to win more than you lose. You will lose, but you're going to win more than you lose. Which means that, guys, if you've got a coin, if you just arbitrarily flip a coin, it's heads or tails. You'll never know. Your chances of survival are 50-50 every time. But if you weight one side of the coin so that it lands on heads more than it does tail, you would be a fool to ever bet against heads. Does that make sense? It would be ridiculous to ever bet against heads. And you would be so comfortable and confident that you would always bet heads. And you would know that it would land tails every now and then, but tails wouldn't bug you because you know that heads is more likely. That's what your rules do for you. But once you get in, you have to know what your management rules are, guys. Initially, it's going to be the KISS plan. It's going to be that very pragmatic approach. And it's going to depend on the trade. Your management plan will be dependent on the trade. You need to know what your daily goal is. You need to know what your daily stop loss is. And if it's not clearly drawn out, you're prone to let adrenaline, opinion, fear, greed fuel the moves, guys. You're going to let your emotions take over. And that wasn't the one that I wanted to share. But it's true. And then this is the one that I wanted to share with you guys. It's called exit conditions. And here's the challenge for new users. And the first part of this is the exact same. Why will you enter? Why will you exit? Commit to the rules met. But if I'm in a high probability trend trade, this is what it takes to get me out. And I'm going to share this with you guys. This is a great way to start working on your management plan. This is what it takes to get me out of that high probability trend trade, which means that if this is what it takes to get me out, if my small triggers roll against the trade, that's not an exit condition. If I bump into a 1-to-1, that's not an exit condition. If the small triggers on the large chart create that jagged or that bubble, that's not an exit condition. I know exactly what it takes to get me out. And guys, if I'm a brand new user and I have a high probability trend trade entry rules to think about, and then I have the KISS plan exit rules to think about, that's a lot to think about as a brand new user. So if I try to add a 50-50 trade with different exit conditions, and I try to add a momentum trade with different exit conditions, and I try to add an HVA trade with different exit conditions, well then guys, what happens is you're thinking about 100 different things. And you're complicating the process. And you have too many mind. We've all seen it, right? Little Tommy Cruise fighting the ninja. And this dude says, man, stop thinking about everything, you yahoo. You're thinking about the sword and the people and the enemy. There's too many minds. It's got to be no mind. It's got to be second nature in the beginning, guys. And the easiest way is to focus on a high probability trend trade, entry to exit. And then when it becomes second nature, go to the second trade. So I dropped that in there for you guys. I totally forgot what I was talking about. Oh, that was going back to Rob, right? If you know what it takes to get you in and out, what happens is you're less likely to hold for a $700 loss on a trade that could have been a $100 winner. And if you get in without stops and targets, guys, and that market moves fast, that can become problematic. All right, Morgan, let's see what you did. I hope that made sense without being preachy. Good bottom, odds favorable. Morgan, you had the clear path. You get in just above support, inside of favorable large triggers. Did you get $100? You took $100 and you got out break even. In 2 bars, Morgan made $100. It didn't go through, did it, Morgan? But in 2 bars, you made $100. That's pretty awesome, in my opinion. Nicely done. Way to stick to your plan. And it paid dividends. It doesn't have to be difficult. Jeffrey Dean. Jeffrey Dean says, dun, 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 dun. Bottom looks better with triggers going possible wide. It's just going to have to wait a bit for a possible clear path. Weak top. Why does it look like a 50-50, Jeffrey Dean? Help me out. What looks like a 50-50 to you here? And it's important to me that we talk about this because I've got a very clear definition of what a 50-50 is. And sometimes your definition may be different. For me, a 50-50, Jeffrey Dean, means, and for everybody in the room, what a 50-50 means to me, so 50-50, you're equating that with your chances of winning, right? You're saying if I take this look 100 times, I'm going to win 50 of them. Is that what you're saying there? When I talk about a 50-50, what I'm saying, Jeffrey Dean, is that 50% of my triggers are through the area and 50% are not. And it's a reference to an area's potential to break. And Jeffrey Dean, I think if you took this picture 100 times, what you would find is this is more like a 20-80. Maybe a 30-70 on a good day. And why is that? As luck would have it, I took pictures of this very thing happening this morning when it happened. Let me go to my library. Come on, library. Yeah, don't confuse it. Don't make it harder than it needs to be. So check it out. Here is the exact moment. Price reached the mid-band. The large triggers were a full bar away. What does that mean to me? That means that the gap theory is in effect. This is 100% when the mid-band behaves as a termination condition. So Jeffrey, if you trade directly into a termination condition, do you still think you have a 50% chance of winning? I don't. Because price is likely to close the gap back to those large triggers. That was at about 616. So where is my next picture with that one? There it is, closing the gap. Isn't that amazing? It's just a pattern. That's all it is. is it's just a pattern that says when price accelerates away from the large triggers, I put my I'll be darned there, and hits a mid-band, that it's likely to close the gap. So Jeffrey, you were spot on 100% saying, I'm going to wait for a clear path. Because rule number 2 says don't take that trade. It's likely to close the gap, and that's exactly what happened. And rule number 2 doesn't say go short. All it says is that you don't have a clear path. Let's wait for it. Yeah, so the mid-band on the large chart behaves as a termination condition. The mid-band on the large chart, and if we go back to the rules, and I love the rules, guys. I always try to reference back to the very simple concepts. Your large chart, lines can be problematic. On your large chart, when you go to tops and bottoms, termination conditions, support, resistance, one-to-ones, divergence, highs and lows, right? Those are those large chart lines that are very simple, and the recipe says if price reaches them and the triggers are below, don't trade into them. Well, a large chart mid-band can be a termination condition if the large triggers are a full bar away. And that's what that gap theory does for you guys. That gap theory says you've reached the mid-band and your large triggers are a full bar away. And I know that they are because they're below the reversal bar marker. And it says don't take that short or that long trade. Don't do it yet, Mark. Price is likely to close the gap. Pretty cool. Great picture, Jeffrey. And I don't know that you were even sure why you weren't stoked on that, right? It didn't feel right. And it didn't feel right because your subconscious was saying, hey man, gap theory. Your subconscious was saying, I've seen this pattern. I haven't defined it well enough to understand it, but I do know that it's problematic. So if you want to go back and study the gap theory, ladies and gentlemen, the spreadsheet that I dropped into the room earlier has, and I'll show you where to find it. When you open up that spreadsheet and you go to patterns that repeat themselves, there's about 30 pictures of the gap theory. You'll see gap, gap theory, gap, gap, gap theory, gap theory, gap theory, gap theory. So much so, Jeffrey Dean, check it out. I put today's picture into the spreadsheet as well because I believe that patterns are what creates success, guys. You guys have patterns for entries. You have patterns for terminations. And once you learn these patterns, it's pretty cool. Jeffrey, great picture, man. Thank you for posting that. And I told you guys, all you have to do is post in the room and I'll find a way to turn it into a lesson. Because there's 1,000 things on every chart that I may see that you may not, only because I've been reading charts a little longer. And Jeffrey, you posted that absolutely perfect. You told me what you saw and what you were thinking, and you didn't take the trade, and we turned it into a beautiful lesson. Thank you. And then Paul W., everything says up. The momentum is strong. The entry is great. The profits were taken, and you got out break even as well. You and Morgan are in cahoots, right? And then that second lower divergence, I identified that as an exit condition in my plan. So even if you took it again, you probably made another 100. But how amazing that you were able to make money down 2 bars, guys, getting paid 2 bars worth of information. I think that's pretty rad. And it shows a little bit about the precision and how keeping it very mechanical allows you to get paid, even when other people are sitting there hoping, wishing, praying. All right, Steve T. I said kaputs, but I meant cahoots. All right, Steve T, let's see how you handled it. Odds favorable, clear top, or clear path. And then Steve T, we don't even know that it's a top. It's just a pullback, right? You take the same potential entry, and then I want you to see what you did here. You had a limit order just above the mid-band, and the triggers. So you were, 3 or 4, use the reversal bar and it gets you. And Steve T, this is a pretty awesome lesson. And this will be your next step in the process. Your next step in the process will say, when I have odds favorable and a clear path, I'm probably not going to put a stop at a mid band inside of favorable large triggers. Do you see how your exit is right at the entry? The first bar didn't make it down to the mid band, and you literally had probably 4 or 5 ticks to the mid band, because the mid band was probably down around 05, maybe 06. So you're about 3 ticks above it. Totally cool. Paul did the same thing. I like it. I don't disagree with it at all. And then from 09, it made it to 19. There's your $100, right? 09, you got out at 18. So you took $180 and then got out and you gave back 40. So that's a $140 trade. Beautiful. And then you get back in because the rules are still met and you get paid again. I can't see what that exit is. It looks like 17, maybe 16. So another 200. So you're up 340, Steve T. And you make another 40. So about 360 in the scramble. Is that right? Am I reading that right? You made about $360 because you had a plan, because you were willing to get paid. And guys, I love this. I love everything about it. $400 on a trade that failed from great management. Steve T, outstanding. You get the gold star today. For now. For now, because I have to look at Cindy's. And Cindy's a gold star stealing mofo. Oh, Steve Diego, here's your momentum trade. Everything says up with odds favorable momentum. Cindy lets it break, buys the snapback, and gets paid twice all the way up. Oh, Steve T, she just took your gold star. That's not true. She gets the momentum trade gold star, and Steve T gets the kick-ass management star. One of my favorite trades. Notice that it's odds favorable on both charts. And Cindy is trading the potential of this area to break. The potential of this area to break. She lets the small... Guys, this is textbook. So if you're trying to be a momentum trader, you should steal this picture. If you're trying to catch this trade, and guys, it happens on every market. She had a strong triggers coming from a good bottom. She has the potential to break, takes the perfect entry, virtually no risk, and easy money with all the momentum. Guys, you should steal that trade. You should study that trade. That's one of my favorites. And then Andy Man. Andy Man says, you know, Mark, call me crazy, but when I have odds favorable momentum and a clear path, I'll get in at the area inside of favorable large triggers, and I know exactly where my stop goes, and I'll make some money. And Andy, this is absolutely beautiful trading. Nicely done. Nicely done. He's using a 10-2 for entry. If you guys are using the 10-2 for entry, I have a rule in place in my own personal trading that I'm willing to share with you guys. If I get divergence on the low, I wait for a reversal bar. And all it does is it says divergence can push it up a little higher. A reversal bar gives me established risk, right? So you're actually in maybe maybe the exact same entrance, but now your risk is established. I find that the reversal bar, when you're trading the NASDAQ using the 10-2, if there's divergence, I find that it gives me a little more calm. Great trade, Andy. And I see that you're taking very well-designed exits. Nicely done, man. Andy, you have turned a corner and you are headed towards Rockstarville, and you said you're 30 shy of your goal, you're okay stopping for the day. I don't disagree. Absolutely beautiful trading, Andy. It's been a fun ride, man. Remember when you were all over the place, and now everything you do looks exactly the same? I love this. Ron took the same darn trade twice. He got it once over here and once over here. Beautiful, Ron. Momentum for the win. Momentum for the win. I love that phrase. Momentum for the win. That should be stitched into a pillow. All right, Steve Diego. Let's see what we have. Momentum trade with no momentum. You had momentum, brother. You did have momentum, Steve Diego. You did have a strong bottom. You had everything up. You had momentum. The one thing that you didn't have is you're not trading the potential to break, right? Since the small triggers didn't get through, you recognize it after the fact. Guys, this is what you're going to do as you develop a plan. So Steve Diego, absolutely right idea. You forgot about that one piece of the puzzle that says, let's let the small triggers get through so that the area has the potential to break. And with that look, the entry becomes much easier. Does that make sense, Steve? Other than that, spot on. Yep, perfect. And what you're doing right now, Steve, is you're developing your plan. You're creating that recognition for the momentum trade. And guys, I never tell you whether to be on Live Money or Simulator. But when you're still making mistakes where you forget one of the rules, this is what Simulator's for. So for you guys like Christine and V Crypto and Pluto and Jordan and anybody else that's kind of working through their plan right now, Simulator allows you to make these mistakes without fear, to go back, to annotate. And what's amazing, Steve Diego, and I want you to celebrate this, is that you're able to look at your chart after the fact and know exactly what you did wrong. And it's the repetition that's going to get you to where you'll be able to avoid that mistake before it happens. Great job, dude. And again, guys, I'm telling you, I blew out like 12 or 13 accounts trying to learn how to trade the NASDAQ when I could have just kept it on Simulator and not had to worry about it. All right, let's see what we have. Everything is up, right? You take the perfect entry, quick profits, awesome management. Steve, perfect. So while you're learning momentum trades, you're making money on the other trades. And then odds favorable, snap back to the one-to-ones. I love everything about it. Quick money. Smart exit on the wrong side of smalls. Putting on a clinic. $100. Making on a 2-lot, making about 120, 130 right here. And then coming back through and making another 100 and another 110. So about 350. Steve Diego, that's a man with a plan right there. I love this. Oh, computer crash? Hold on. No rules met. No clear path. Rule 2 not met. 50-50. Largest not through area, but with strong bottom. The potential is good. Momentum trade. Correction point. Love the language. Second contract off, reversal bar marker and divergence prints plus 30. Second trade momentum, first contract 100. Second target was the fibs, feeling stop was in at break even. The Ninja Trader crashed, restart immediately, exit with 120. Right on. Steve Diego, typically, even if you crash, they're electronic, they should still work. It probably hit your target and didn't fill. So great job being able to get back to it. I'm a big fan, and I'm a little old-fashioned. I typically put my target a tick or two above the fib, but that may have hit it, not filled it, and then started to go. And if you're on something like Tradevate, I don't know if you're trading a prop firm or not, but every prop firm gives you the ability to control your trades outside of NinjaTrader. So if I crash, yeah, if I crash, I'm hitting close outside of it. But you got in. It's beautiful trading, man. Outstanding trading. Guys, this is about as beautiful. I mean, let's go through it. Strong bottom, 50-50. So he takes it with one divergence. Great entries create manageable trades. Profits taken. No reason to hope. Exits the trade. Beautiful. Odds favorable. Odds favorable. Snap back with odds favorable. Sniper. Paid on the way down. I love everything about it. It's fun for me to see you guys do this. It really is. Because all of you come from a place where you're just unsure, and then you start to feel this confidence. When you guys latch on to one or two trades, you start to just feel the confidence. Ron says, hey, I don't know if you guys knew this, but when I have momentum and the back of the bar clears a fib, and I have odds favorable momentum, I can make $100 on a 1, 2, 3, 4, 5 lot. 4 lot? 1, 2, 3, 4 lot. Sorry, English major. $440. Ron, how long do you suppose that was from entry to exit with all that momentum? 10 seconds, maybe? 12 seconds? Guys, that's rodeo trading. That's 7 seconds on the back of a bull named Fu Manchu. But it revolves around momentum. Guys, this is a strong bottom, full reversal, odds favorable, nothing in the way. $440 in 10 seconds. Are you guys starting to get the idea that it doesn't have to be a home run to get paid? Because everyone in this classroom is putting on a freaking clinic with it right now. That's what $440 a day does for you. He does the 40 to cover commissions. Is there anyone in this room that would be bummed on an extra 110 a year? That's not bad. That's a pretty good income, I believe. I could be wrong. Some of you might need, $2 million a year to support your lifestyle. That's okay. All right, Cindy, there's a termination. Hey, Paul, do you remember, Paul W., do you remember when we were talking about, Mark, would you let 3 divergences take the place of a strong bottom? See how the 3 divergences kind of confirms that they got a few ticks through? I like that. So when this termination gives me those strong small triggers, Cindy says, you know what? This is just one of those momentum trades, but she's not using odds favorable momentum on the large chart. She's using what we call the momentum phase. When the termination happens and the small triggers crank up, when the price bars are this far outside of the small triggers, guys, that's momentum. It's not odds favorable. And Cindy says, with this look on the large chart, when my large triggers roll and I have odds favorable and there is no divergence and the smalls break through, and 3 divergence, oh my gosh, I'm going to buy that one and carry it up to trouble. Nice, right? And just getting out at the 1-to-1s. It doesn't have to be a home run, does it? Doesn't have to be a home run. Cindy, absolutely gorgeous trading today. And we're going to go back and do a lesson on that momentum phase. Daryl S. Daryl S says, F you and your termination conditions. I'm trading into them. Not really. Daryl doesn't swear, I'm sure. I'll swear for him. He has people for that. Can we talk about why this is such a nice trade? Daryl, you were a sailor? I love it. All right. Daryl just opened the door for a lesson. And I want you to see something. But Mark, and guys, I get emails like this all the time. But Mark, he traded into a termination condition. But Mark, triggers didn't clear the termination condition. Who cares? Don't be the trade police, guys. You're a sailor, Daryl, so you understand this. This is the bar fight analogy. I want you to see this. This is a strong bottom, or a strong bottom. Strong bottom. This thing squats, guys, in the gym 7 days a week. This is the best momentum I could ever hope for from a strong bottom. This is the smallest risk. Guys, has anyone ever seen those crash tests where the cars hit a wall at 60 miles an hour and it's almost like they bounce, right? But that forward inertia is still going. Guys, when you have this level of momentum from this strong bottom, Daryl's been around long enough to know that it so often retests the area. It so often retests the area. And Daryl accepts 100% that he's trading into a termination condition. Daryl accepts 100% that the path isn't clear. And Daryl, can I ask you, did you have any misconceptions about the idea that that might have just run you the F over? Because when price reaches an area and the triggers don't break, it can terminate the trend. You were sweating. You knew that you were breaking a rule, right? So check it out. I just closed out my chart. Dagnabbit. Let me rebuild a chart real quick. Hey, we'll turn this into a lesson. New chart. And it's going to have me put in some inputs, guys. I need it to be crude oil. And I have to have a template. So I need a 13.2 Renko bar. 13.2. Make sure I have my tick replay. And click OK. And now it's going to build a chart for me. It's going to rebuild that 13.2 for me. It's doing it on a different one. If you accidentally X out a chart too, guys, you can go to your workspaces and close it. And when it asks you to save it, just say no. Say, nope, not going to do it, and it'll bring that 13.2 back. So, Daryl, you get all the praise for the way you handled that trade. But now I've got to go remind new users of a thing or two. Odds favorable momentum into a termination condition. It didn't retest, it reversed. Odds favorable momentum into a termination condition. It didn't retest, it reversed. Right? The same thing here. The same thing here. The same thing here. Consolidation. Right here. So the reason I'm doing this is not to say, dang it, Daryl, what the hell were you thinking? I did it to say, when you're a chart reader, guys, you might be willing to take a shot at these things. But you do it understanding, if Daryl's in at 21, his stop is at 15. Is it worth $60 per contract with this level of momentum? Is it worth 60 from a strong bottom? Only you can answer that question. But when you talk about advantages, when you get into the trade, when you talk yourself through momentum, when you talk yourself through clear path, you know exactly what you're getting into, and you know that you need to manage it aggressively. I love everything about it, Daryl. Me personally, I won't do it if there's divergence. Personally, I won't do it. But I respect your right to get in, and your management is perfect. There's not a shred of hope in that management. It is 100%. I'm not going to sit here and hope that that thing lasts forever. I'm going to get the hell out of trouble. So, great job. Great job. Are you guys learning anything today? How about anything about termination conditions? That's a pretty good one, isn't it? There it is again. Remember when I said rule number 2 might do wonders to keep you out of consolidation? Kind of cool, right? Christine, is it any easier today? V Crypto, you've been with me about a week. Are you starting to see it a little more clearly? Pluto, is it starting to come together? Jordan, how about you? You got quiet on me. It's important to me that nobody gets left behind, but guys, I can't see your faces. I can't see your faces. I don't know, Christine, you might be blowing up my cell phone saying this doesn't make any sense at all. But guys, every day you're going to get a little bit closer, right? Every day. Second day, you're slow in general, so you're getting it. Second day, man, don't create unrealistic expectations. By day 5, Pluto, it's going to be pretty awesome. And you will. Everybody in this room at some point said, man, I just don't know if I can do this. Am I wrong? Am I the only one that did that? I've gotten emails from a lot of people that say, hey, Mark, you know what? I'm going to quit because this seems way too hard. Can I tell you what the most common reason for that is? Is trying to find all the trades instead of committing to the best trades. Most people, when they come into this room, they see Ron taking momentum. Man, I am too, guys. I don't think anybody's as gifted as they think they are. And anytime you learn a new concept, we define slow based on past successes, right? My previous life, ladies and gentlemen, I was really freaking good at what I did. I was the guy that wrote sales plans. I was the guy that trained incoming managers. I was the guy that set up the routines and the systems in place to create success. And I was good at it. And I took all that knowledge for granted. And then I decided to become a day trader. And I thought I would get it as easy as I had gotten it at the thing that I'd spent 10 years learning. And I didn't give myself an ounce of grace. And I was like, this sucks. I'm no good. I suck. But the reality is, guys, is nobody in their freshman year of college, no one in their freshman year of college is building bridges as an architect or an engineer, and nobody's doing appendectomies, right? And you just gotta work it a little bit. Work what's right for you. Absolutely, Ron. Do you guys know why? And let me ask this right here. I'm going to pull up the internet because, you know, I'm a modern kind of guy. Everybody's seen flying geese, right? Everybody has seen the arrows that they make. Do you guys know why one side is always longer than the other? Does anyone? One side of geese lines are always longer than the other side. Have you ever noticed that? Without fail. And Rob knows the answer. Everybody, when you say that, why is one side longer? And Ron taught me this probably 2 years ago. Everybody tries to overthink it. Well, one of them is a spotter, and one of them is making sure that the sick don't fall behind, or maybe the strongest one tails on the end to make sure that the pack moves forward. And the reality is, guys, is it's just more geese. But your brain is going to try to complicate things. Elon Musk said that he hates engineers because they're always trying to optimize things that shouldn't exist in the first place. And my approach to teaching is one, I assume that you know nothing, because I knew nothing. Absolutely nothing was obvious to me. And that was my biggest challenge when my brother taught the room. Is my brother is Einstein, and he's trying to teach string theory to second graders. And that's how I felt. I didn't understand the language. So what I needed, and when I started teaching the room, guys, is I taught it based on all the challenges that I have, that nothing is obvious, that nothing is taken for granted, that nothing is guaranteed, right? And I found that if I break it down into three very simple pieces to learn, three looks, and that's it, that I could take winning trades, that I could win more than I lost. And then once I learned to manage those advantages, I started seeing a million things, nothing to unlearn. And Ron, I had that same advantage, but it used to frustrate the ever loving crap out of me because I would be in the room and I would see people posting winners. And I'm competitive, guys, and I didn't have winners to post. All I had was losers to post. And the losers are where I could have been smarter. The losers are where I could have gotten the greatest lessons, but instead I hid them from my brother. And I never presented them. And I got nowhere. So I try to make this a place where you guys feel comfortable, where you can post the losers, where we can turn them into lessons. And all we're doing is we're doing the cha-cha, guys. We're doing 2 steps forward, 1 step back, and eventually we hit our goals and it becomes easy. But the more you look for, if you're chasing money, you're going to struggle. If you are embracing the process, you're going to do great. And on that little soapbox, I'm going to take 5 minutes, guys. I'm going to go stretch my legs. I might even eat a granola bar. Might have a popsicle. I don't know. Because right now, price reached a line and the triggers remain below. And there's nothing to do. And then, Daryl, your into a termination was a 50-50 for me from a strong bottom. That's my trade all day long. Kind of cool, right? I'm not sure why we're different. Maybe it's days back. Maybe it's different midnights. My look was better than your look, and you still made money on it. Beauty. All right, guys. I will be back in 5. If you have a question, post it. If you've never posted a picture in my room, I want to see a picture from you. Does everybody have their TechSmith capture? If you've never posted a picture in my room, I want to see a picture, guys. I don't care what it is. Go to the internet, right? And find a picture. And drop it in the room. Dude, I'm so bad at leaving, Ron. Because I like teaching. I enjoy the heck out of teaching. I like being here. Take your capture software, mash that big red button, and just click and drag. Hit the camera. Don't even annotate it. Hit upload. And once you upload, hit the copy button on that screencast link and drop it in the room. Show me a picture of your dog. That's what I want to see. Pluto, if you have a pet, show me a picture of your pet. Christine, show me a picture of your kid going to medical school. Somebody, if you haven't posted, show me something, guys. Let me know you can do it. And if you can't do it, let me know. We'll do a lesson on it. I'll be back in 5, for real this time. back. Steve Diego, termination condition. Small triggers absolutely cranking through, made it below. If you're going to try the momentum trade, it looks like that. What's the challenge though? We reached the mid band. Do you guys remember this one? Large triggers are above the reversal bar marker. Ladies and gentlemen, we have the gap theory in effect. This is the look. Price reaches the mid band. Large triggers are above the reversal bar marker. Guys, very often this is like a sucking noise as price comes back to those large triggers. This is the gap theory. All right, Jordan, I appreciate you stepping out. There you go. Jordan says, I heard this thing about momentum from a good bottom, and it turns out I can get paid. It's pretty awesome. Easy $1,000, right, Jordan? Let it clear the trouble. Giddy up. Not an ounce of greed in that picture. Beautiful work. Nicely done. All right, guys. So we've made it through all the pictures. We have talked about everything that I know how to talk about. I've got odds favorable momentum. I've got a clear path. All I need now is a reversal bar. All I need now is that small crowd to fight, to say, hey, guess what? Here's your reversal bar. Here's your pullback. And guys, from the bottom of the triggers to the top of the triggers, in the moment, these are my only areas inside of triggers. Does everybody see it? Can you give me a Y if you see it? I just need a pullback. Ron, clear the back at 10, 10. Ron probably went short around right there. He's already in and out. He's got a different plan. I'm waiting and hoping. Give me a pullback. Get me to that mid band inside of favorable large triggers. But you guys see how quickly that read happens? First bar says odds favorable. First bar says clear path. Price didn't reach an area. All I have to do is look right. One bounce point inside of triggers, a second bounce point inside of triggers. All I need is a small crowd to do their thing, guys. I need a small crowd to push. And if I get a reversal bar, it's my lowest point of resistance, my highest point of resistance inside of favorable large triggers. I have no idea. He had a card in his wallet that said certified bikini inspector, but I don't know that that's true. I think he might have just made that up. Didn't take it, thought about it, but goal met. So why bother, right? Shut down, go live life. Uh-oh. Small crowd's trying, guys. Check it out. They're trying to give a reversal bar. 1, 2 ticks below the lowest point of resistance. I sure hope they win. I hope the small crowd gets it. Are there any questions about what we're looking at right now? I am by no means telling anybody to take a trade. The only thing I'm saying is that my window of opportunity, if I'm a high probability trend trader, has reduced itself to one line inside of favorable large triggers. All I'm doing is chart reading right now. Pluto, do you see it? Strong triggers. And I'm always asking myself, has price reached an area? Has price reached an area? Awesome. Christine, do you see it? Strong triggers, price has not reached the area. We're way below all the other areas. That path is clear. If I get a reversal bar, I've got one line inside of those triggers, right? So I'm just going to right click, sell limit, and hope the small crowd gets to it. You have the fib, Cindy? At 82. All right, so I'm 50-50 on yours, huh? From a good top? I still feel comfortable. Let's just go through it. Since I can't see your fib, I'm going to trade my charts. That's all I can do. Guys, if there's something you want to talk about, drop it in the room. Otherwise, we're going to sit here and see if it sets up. Nothing to do here. Trigger lines don't even match. Notice how there's not a tail, but the bottom of that bar is where that pullback seems to be trying to happen from. Cindy says, Mark, John Novak is a personal friend of mine. He gives me extra fibs just to try to keep me safe. You're Eastern, right? You're Eastern time frame, Cindy, down there in Miami. 10 days back. I rebuild so often and clean up data and reset and repair. It might be a different data provider. This is hard, right? Oh my gosh. I just want an entry, but it hasn't happened yet. Did Miami get flooded? Oh man. What happens if they hit that fib? If price reaches that fib, that would be a termination condition, right? So what am I doing? Man, I'm hoping that the small crowd shows up to play. And that's all I can do. They may or may not. What do you guys want to talk about? I'd love to. Let me zip it up for you real quick, Steve. Yeah, my template is the exact same one from the resource page. I don't have anything special. Like, I don't have any secret handshake ones. Whoop, it hit it. I gotta cancel. Let me get there for you real quick. Workspaces. Oh, I got you. There you go. That's going to have an 8 range on it as well. Off to the side. Man, guys, this is one of those not my money scenarios. Which is a bummer. Oh. Can't get Christine and Cindy together. That just sounds like a recipe for trouble. You're welcome. All right, so the process starts over, right? Cindy, I've known Christine for almost 30 years now. You would love her. All right, guys. I don't have any rules met anymore. I've got anything can happen triggers, but I do have a clear path. And I'm back in a holding pattern. And NASDAQ made it. Term on the NASDAQ? Yeah, term on the S&P as well. I don't have my NASDAQ open. I could open NASDAQ too. We could look at that. We could look at all of it. Is there something you guys want to talk about? Is there a concept or an entry? I love the NASDAQ, Cindy. Do you know what I think the challenge is on the NASDAQ for most traders? Is the NASDAQ moves so fast that you convince yourself there's 300 trades a day. The NASDAQ is always in motion, which means that your brain tells you that you have to constantly be busy. But the reality is the NASDAQ can move like a, I don't know, like a methed out chihuahua for a while. Absolutely. So what she was telling me, Christine, is you see how she had Fibonacci support right here on her chart at 8202? On my chart, it didn't say, I didn't have a Fibonacci area there. And it might be a data issue or something, some discrepancy, me resetting different things. But so when Cindy says, I have a fib there, she means when she looks at her chart, she has Fibonacci support hanging out right there. So while I had a clear path, Cindy only had a 50-50. Does that make sense? So sometimes what happens, and Christine, this is just a good lesson for everybody that's brand new. When you open up your software, it's really pretty outstanding. I had no idea my brother was this smart. I think he loves it when I say that. I'm sure he does. So your software goes back default 10 days. So you've got 10 days worth of data every time you open up your software. And your software measures every swing in the market, every pivot, every up, every down on 10 days back on that 13-2 chart. Oh, hey, Jonathan, you're doing great, man. Have a great day. And after it measures every swing on one time frame, it creates synthetic time frames, about 10 higher, 10 lower, and it begins to project forward and it goes back and it takes a million Fibonacci calculations, right? And it creates all of these different lines, and this is what it looks like before the algorithm kicks in, before the smart stuff happens. So you get all of these lines, and then it weighs them out and it sorts them and it does all these things, and then that's what gets us to these lines on the chart. But what happens sometimes is my computer's set in Eastern time zone, which means that my midnight is Eastern. And then someone like Morgan, who's on the West Coast, his midnight is 3 hours behind mine, which means that when the software starts making these calculations, there's literally a 3-hour gap. I have 3 hours worth of swings that maybe his doesn't have. And that can create a little different Fibonacci setup. If you have a data provider and I have a different data provider, Cindy, and they're 2 ticks off from one another for whatever reason, that 2 ticks, when compounded over 10 days and different time frames, will create different calculations. And sometimes you'll end up with a fib, and sometimes I won't have a fib. Sometimes I'll reset and repair my data, guys. I do that a lot because I spend so much time redrawing everything on NinjaTrader that can create. So there's a lot of different scenarios, and I just always tell people, trade your charts. Just trade your charts. Whatever you see, trade it, because your fibs are still made up upon thousands of calculations. Back of the bar clears the problem. Everything is down. Easy money. Must be second at bat. So Steve, data just in general, everything digital it has the potential for corruption, I guess is the easiest way to say it. So let me go to the website real quick and I'll show you what I do. And NinjaTrader has some inherent problems. But one of the things that I do every morning, and let me find it. well, I guess I could just show you here too. Here's the link. Here's your how to fish. And let me give you a fish as well. Every morning, and guys, it'll slow your computer down when you're opening workspaces because it's doing millions of calculations. And when you're opening up the NASDAQ, there's so much volatility. There's so many swings. So every morning, Steve T, this is part of my routine every day, is I go to my documents folder and I go to NinjaTrader 8. And the first thing I do is I go to database. And every morning I get rid of cache and tick. And what this does is it gets rid of all the old data. So it's starting fresh every morning. And then I'll go back and I'll go to my temp folder and I'll take out whatever files are inside of that temp folder. And then I will go to my workspaces. You just get rid of everything and start totally fresh. And I'll get rid of my recovery folder and any extra untitles just because I've got OCD. No, not at all. It works fine. It just means that it's going to take you a minute or two longer probably. But I'll do that if I feel like I'm having problems. But I do that every morning, Steve, just a little clean out. And then this goes through a lot of the things that you just want to make sure of. Making sure that you're in peak performance, making sure that your computer's not going to sleep, making sure that your graphics are set right, making sure that your power plan is in place. There's a lot of things you can do to help your computer run more efficiently with the software because NinjaTrader's got a pretty good draw. Guys, I'm still calculating. Yeah, no worries. And then, Steve, what I'll do too, and this is just me because I spend so much time adjusting charts for class and taking stuff off and putting it on, that at least once a week, I do this. And I'm not saying that you guys have to, but once a week, I'll just get rid of everything. I call it the NinjaTrader enema. I'll delete all my old charts, all my old templates. So if there's anything corrupt hidden in there, it goes away. And then I'll literally go to the resources page. And I'll just re-download everything. And this will even come through and repair NinjaTrader. If there's anything going on in NinjaTrader that you can't see, that'll throw a little repair on it by doing this. And it takes a little bit. You've got to... you've got to wait for everything to populate. And like I put my workspaces on my center screen, but for whatever reason, when I rerun indicators, it comes up on my left screen. So I've got to let them come over and redrag them, and I've got to build an extra chart or two if I need it, change the time frame, whatever. So you'll have to get it set back up, but it's really not the worst thing in the world. And isn't this cool? You can actually watch your software as it runs through calculations, creating trigger lines, creating Fibonacci areas. Right now, none of the synthetics are on my large chart yet. It's still running all those calculations, thousands upon thousands of calculations. On the website, is that an old picture of John? Which picture, Ron? That is not John. This guy has hair. So if you've never met John Novak, he's larger than life. John Novak is about 6'2", has a back so wide you could show a movie on it, spent most of his life in the gym. He's a big, handsome fella. But he has... Here we go. There's John Novak. Your husband thought you were John? That's John Novak, guys. That's weird. Was it your muscles? You look like you have hair. All right, Ollie, let's see what we have, brother. Termination. Trying to figure this out. Nice termination. Smalls are up, but they're below the large. And you wait for everything to agree. And you get in at the mid-band. And you ride it up to trouble. I like it. And it's not a high probability trend trade, Ollie, because we don't have odds favorable momentum yet. But what you've done is you've said with this termination, with everything pointing up, and a low risk entry, what a great opportunity to get paid on the way up. I love this trade. This is kind of a continuation trade, and it's really well executed. And use a market flow signal as well. I like it. Notice that this pullback right here coincides with the pullback to those really strong small triggers. That's what makes this trade work. I love everything about it. Nicely done. Been reading? It's been working. You should keep reading. Ah, that's my file explorer. It's fun to know what people look like, I think. For me, anyway. I love it when you guys put your profile pictures up there. Something about having a name to the face. It's kind of fun. That's your face, Muser? I love it. I don't think I have one of me. I posted one a week ago when I cut my hair. Man, go enjoy. Go enjoy, Ron. What good is the beach if you don't get to sit in the chair on it, right? All right, Cindy, termination. Let me see if I can do this. Termination, 50-50, right? Smalls didn't really break through yet, so your best entry is probably coming back here. Yeah, you just didn't have much place to go. Large triggers hadn't cleared. You already had a couple divergences. That's a tough one in 2 ticks. It's just kind of an ugly look. I like it. And it's a small loser, right? Waiting for the area pays a couple dividends. Instead of getting in at 94 up here. Oh, you took it as a momentum? Cindy, do you notice that your small triggers aren't really through when you take that trade? That the bars haven't really made it through? I think there's a huge difference in the success on these. Letting these small triggers clear a little bit. It really, really seems to create more wins. Yeah. Ooh, that's ugly. Let's see if we can find a good example of it. Maybe over here at 11:11. Not a solid example of it. Maybe a short. I like to scroll back and just look for trades sometimes. And what I'll do sometimes is I'll come back and I'll look for this pattern. Even this one right here. See how the smalls really get through it, Cindy? And then it pops back. That's kind of my look. That helps. I think that makes it a little more high probability, or at least a higher probability. Everything says down. Absolutely beautiful entry. And what a smart exit. Perfect. Ollie, beautiful, man. I mean, holy smokes. I could teach a class on this one. I think I do. And then we get into, ooh, not a 50-50. I like the strong bottom, and I love the momentum. But do you see how the small triggers haven't broken through yet, Ollie? One line is through, but one line isn't. So we're still into a termination condition here. Without the divergence, I like it, right? Take a shot. And once you get divergence from that termination, that's your get out, right? So I'm glad that you were able to make a little bit of money on it. But that termination, and we saw this earlier too, with no divergence, it's likely to retest. And once you get that divergence, that's a game changer. That's when bad things happen. And it looks like it was right at the fib update too. So good look. Just a little bit of trouble there, and the trouble worked. The trouble did exactly what we would expect trouble to do. Nicely done. All right, guys, somebody post a picture. I'm going to go let my dog out back real quick. I'll be back in 30 seconds. All right, guys, what do you want to talk about? We've got a few more minutes. Cindy, let's see what you did. Remember, guys, it's just all rinse and repeat. All rinse and repeat. Why are you mad at me, Cindy? Yeah, we saw this one, right? Just didn't work out. Even over here, I like it. You still had that momentum backing it up a little bit. Uh-oh. Uh-oh. Nice. Does she speak Spanish? I love her. She does speak Spanish? That's awesome. We rescued a dog from Laredo. And when we got her, we weren't sure if she spoke Spanish or English because she was from Laredo. So it was funny. So I was talking to my dog in Spanish. She's 15. Aw, she's adorable. I love the dog pictures. Love the dog pictures. I don't think I have any dog pictures on my computer. Your ex gave her to me? It sounds like you came out just fine if that was the ex, right? That's a good trade. He left and you got the dog. Oh, I didn't know you had cancer. Well, I'm glad to still have you around. Steve Diego. Strong top, odds favorable. Perfect entry on the reversal bar. Beautiful. Easy money. Nicely done, Steve Diego. I like that you waited for that reversal bar. Kept you from getting in down here, huh? Nicely done. Nicely done, Steve. And then Jen, strong bottom, odds favorable. Using the mid band with the strong triggers, absolutely perfect, and held it. Goodness. Jen, you don't say a word all day and then you drop this. Very nice. Take a look at this trade. See if it makes sense. Did you write your rules on there for me? Waiting all day. Then I bet it'll make perfect sense. Let's see. All right, price reversed at the fibs with an entry confirmation from an antenna bar with stranded sellers. Both the 13.2 and 5.1 charts had divergences, expecting price to retrace as low as the mid band on the 13.2. No termination condition. Well, you definitely have termination conditions. Well, maybe not. Smalls are kind of hovering. Weak bottom with half the triggers already made it through the fibs. Entry based on market flow signal at 80. And 80 also happens to be a fib, right, Ollie? So it has the potential to break. And you've got a fib and a mid band with the large trigger still up, the small trigger still way the hell up there. And you said, you know what? With stranded sellers at a mid band, right at that fib, I'm willing to take a shot. Because if you break it down into one chart, those large triggers say we're at least retesting. And I think you absolutely nailed it. You used another chart with a little bit of confirmation. And you got out at the first trouble spot. And you weren't willing to just sit and hope. It makes perfect sense to me. All you're looking for is a continuation of the trend up, right? That's all it is saying with all of my triggers above the areas, it's more likely to go up than down, especially with smalls above all of these areas. And then you just incorporated a third chart. I think it's brilliant. I think you did a beautiful job with it. Nicely done. It makes perfect sense to me. It's a great chart read, and it's expectations based on patterns. And that's all we could ever hope for. Very nice. Got a couple minutes. Nice setup on crude. Let's see if I can figure out what you think a nice setup is. Hold on. Let's see. Man, I am still calculating here. Let's see if it'll switch for me. It may or may not. It might just crash my Ninja because it's still calculating. I'm still looking for a picture of my dog on the computer. I don't seem to have one. This is me though. If you ever wondered what the face looks like, dun, 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 just cut all my hair off. That's what I look like. It's about what you figured, right? Hooligan, tattooed. Old man, gray hair, all the good stuff. I sound taller. I'm trying to. Nice tats. Thanks, D. Total hooligan. Not really. I'm the nicest guy you'll ever meet. Nicest guy you'll ever meet. Somebody show me crude oil because I'm stuck in a NASDAQ upload right now. I've got too many workspaces open. My computer's not having it. Somebody post that crude oil. Let's talk through it. Let's see what we end up with. Anybody want to do that for me? Jen will do it. Jen will call me names and then she'll be helpful. That's what I love about Jen. I'm married to Jen. I have a soft spot for you guys. Let's see what we have. I get to see Christine this weekend, so I'll show you guys a picture of Christine too. We saw this one, Jen. The lies have to stop if this relationship's going to continue forward. There we go. So, Paul, you didn't give me the top or bottom. What's the bottom look like? Paul, this is the only time I'll ever ask you to show me your bottom. Oh, look at that. Strong. Strong, strong, strong. Odds favorable from a strong bottom. One divergence. Oh, my only challenge with this one is that my correction point is on the wrong side of my triggers. Is this the most current picture? Should we give it 2 minutes and see what happens? Some people will take this with divergence because of the strong bottom. Some people won't. I do my best not to create an opinion one way or the other on your trading. Everybody's going to have different rules. Jen, you have... well, it's because you're on the other side of the world. Come play with us. Aganda. You're directly into the termination condition, without a doubt. Yeah, so that's a no dice scenario. On yours, 100%. So let's see what it does, guys. Is divergence going to kill the 50-50? Are entry points beyond the correction on the wrong side of the triggers? Is that going to mess it up? Or is this going to be an awesome trade that sets up and wins? With the tail end of momentum too, it's not that super strong look, it's that smalls returning look. I'm trying to reopen right now, and I'll open up crude oil and we'll see what happens. I love this though, because with the still pictures, can't we start running through the different scenarios? What do my rules say? And let's go to the one that's the US version. I still have momentum. And this looks like a clear path to me. Whose was this? Steve, this was yours, right? So Steve has a clear path. And he has momentum. Everybody's got a different story here. I like it. And the only challenge is that we're on the wrong side of the correction point. That is the only challenge that I can see with your chart, Steve. Is that fibs and mid bands are on the wrong side of those triggers. I would love to. So when we talk about, you know, I've got something for it. Let me get to it and I'll open it up. So every day when I talk about entries, the one thing that I talk about, look at that, it blew through it. I love it. Unless you were long and then I'm sad for you, but dun, 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 dun. So this is what I talk about every day, Steve. And hope maybe you'll hear it. Maybe you've heard it. Maybe you haven't. It's okay. No, not 20 to 30%. It's not. It's not at all. And let me show you why. So the entry on the small chart, guys, it takes that one bar of information from the large chart, dissects it, right? We know that to be true. So large triggers are moving averages, and price typically returns to the large triggers, whether it's the large chart or the small chart. So Steve, when I say correction point, I expect price to correct on the large chart to these large triggers. I expect price to correct to the large triggers on the small chart. So when they're overlapping one on top of the other, the correction point is smaller. And that's where we get the idea of favorable large triggers. That's where we get the idea of creating a super tight, awesome entry area. Does that make sense so far? We expect price to come back to the triggers, and then if the triggers are inside, we expect that to become the bounce point. But what happens, and let me go to another picture real quick, for entries, when I talk about the window of opportunity every morning, the one thing that I talk about, let me find the picture here that we use in class, is I talk about the idea that if my areas are on the wrong side of those triggers, on the wrong side of that correction point, I pull them out of the equation. This is no longer a trade that I want to be in because I only expect price to come to the triggers and then I expect it to bounce off the areas. So as soon as my correction points or my entry areas are on the wrong side of these triggers, Steve Diego, I'm not arbitrarily jumping in, not at all. And Jen, I've got the same termination you do. I'm saying to myself, man, I expect price to come back to the triggers and I expect it to bounce off of lines inside of triggers, and if all my lines are on the other side, right? If all mine are on the other side, I just don't know where it has the potential to stop. It makes it hard to manage. Where does my stop go? Because normally it goes 4 or 5 ticks on the other side of the triggers. Does that make sense? Hey Morgan, have a good one, man. It's not loading. Yeah, this is the template that I sent, Steve. I'm not sure why. I sent someone else a template and it didn't work out. You can ask John in the main room, but I mean, that is directly from the ones that I use every day. Yeah. I don't think you're calling me a liar, but I'll show you exactly where I got it from. Ninja Trader 8. This is a workspace. You said a crude oil template, so I assumed that you meant the workspace. Are you looking for a template? There isn't one that's specifically... What size are you looking for? I see where we did this. Yeah, I know. But what template do you need? Because on anything other than NASDAQ, there isn't one that's specific. On anything other than NASDAQ, it's a 13.2 Renko. It's a 5.1 Renko. NASDAQ is specific because it's a 34 and a 13.2. But any other chart, crude oil, S&P, anything, it's just the 13.2 Renko and the 5.1 Renko. That's it. Does that make sense? It's not a special, yeah, it's not a special one for crude oil. It's for a 13.2 chart. So if you looked at the template that I had on this, it would just say 13.2. Are you missing something on your chart? I'll get it. Let me grab it for you. Templates, chart. Just a 5.1 is all you need? Oh, that's not going to work. This is my chart template. But this is my chart template. This is where it pulls from. Whoops. That's not how that works. So, but it's already there. I don't have to save it as anything else because I know exactly what template it's using. It's using the 5.1 template. Like, I don't need to go through and save this template because this is the template that it uses. Does that make sense? Like, that is literally the exact same template. So much so that if I right click and I reload that 5.1 template, it's going to look exactly the same. I just did. The template's right above you now. But it's literally the exact same template. Yeah, no worries. This is what happens when you get two people that know exactly what they're talking about and not what the other one's talking about. One of the problems with chat boxes, right? That's it. Guys, I think we made it through class. And then Muser, probably Ron would have found an opportunity in there for sure. And did we answer all the questions before we met? I'm sorry, I went on a tangent. Steve Diego, did that answer the question on the correction point? And Paul, thanks for that. Once I get to the wrong side, and it doesn't mean that I won't still take it, Steve, but that's where I wait for one of those reversal bars. For sure. Because that happens. Of course, I had the termination. So we're all right. And guys, that's it for me.